we went to the central bank and said, can you consider gold for Nigeria's reserves? Nothing is easy, and it's not just about Nigeria, but we are here. I remember the first time I also met the CEO of AFC, Samaila, maybe 6 years ago now or so, mining in Daba, something similar. He says, oh, so refinery, now we can refine the gold that we're investing in Thor, Segilola. And we said, no, it's not that simple. Was it 8 years ago? I don't even know. Zenith Bank went into the bushes and towns, villages in Zamfara State, Osun State, Niger State, Kano, Zamfara State, Osun State, Niger State, Kano. I mean, what banks wouldn't do, they did, because we said, we're not doing cash payments. We have to bank all the artisanal miners, and they did, more than 1,000 of them. So we give them credit. So I'm saying all this to just give some mentions, to see that a lot has been going on under the radar. FCMB, how will I thank FCMB? FCMB has done what a lot of banks, commercial banks, will not even think of doing. We have long relationships with everyone else we've mentioned, but FCMB, our relationship is under a year. And what we have done with FCMB Bank in under a year to really come for trade, finance, for financial institutions is monumental. Lagos Commodity Future Exchange, there's a breakfast still going on, they're not done. So I'm acknowledging all these people because it matters and people won't be here later. Finally, I want to really talk about Mudassir Amri as I introduce him. We're not doing long introductions because we've given you a program, everyone's bio is there, and some people will speak. We were having challenges we could not explain about 3-4 years ago. We could see what we were trying to do, but no banker, no one could see the vision. I met Mudassir Amri very briefly. It was an introduction through Tolaram. I don't know if the Tolaram group is here. They're coming. But the Tolaram group, another one who, they just understand commodities and many things. And I hadn't even said 2 words, and his brain had gone to Hong Kong. It had gone to Saudi. It had gone everywhere with everything we had never articulated that we were trying to do. He got it. But why are you having these problems? And literally, Mudassir Amri, during a very busy, hectic time, they were, I think this was Titan Trust Bank, about to acquire Union Bank. I don't know how he found the time to be dealing with me. You know, in Nigeria, if you don't know, if you know the MD of a bank, they won't pick your call. I'm just telling you how it is. They will not pick your call unless you are bringing money. We were not bringing money. But I will be calling Emmy. I will call him. He will answer me. He literally carried this problem on his head. And glory to God, it took 2.5 years because many things were happening, Titan Union, but he never relented. And I want to say that Mudassir Amri is the reason that we finally, for the gold market, the gold sector, got the first facility in Nigeria for gold, that the gold itself is the collateral. He was the one who structured that thing. He muscled it through with the bank, legal. I mean, StoneX, Mudassir, it's unbelievable. And I'm really giving this commendation because, like I said, the MD of a bank, nobody would do it. And then after he did this, this is what opened the door that made Afrexim interested, that made FCMB interested, that made that we're here. And anyone else who's in the gold sector now can benefit from this, because if you go to a bank and you want to do many things, I have to also credit Sterling Bank. I forgot about them. Sterling Bank, Alternative Bank. They will be here. What they are doing in gold, we've partnered to unlock. I have to go back and say all this credit is for Mudassir Amri. So I want to thank him again and introduce him to come give his keynote remarks. Thank you.
Thank you. Well, thank you, Nere. It's a lot. But literally, I think this story is very interesting. I hope someday, definitely, we will go through it. But it's a long journey. And it also tells that, you know, the problems that startups face in this country and unfortunately in our region. But anyway, sorry about this distraction. Yeah, I need to press this, right? Yeah, okay. Good morning. Good morning, everyone. Good morning, distinguished guests. Representatives, of course, from CBN, AFC, Afrexim, Chapel Hill, AFDB, ministries. It's really a privilege to address this gathering of innovators, visionaries, and of course policymakers. Let me just start by stating few facts, recent facts, right? So we saw last month gold crossed 4,300 mark, first time in history. Although we saw some correction after that, right, which we call technical correction after an aggressive bull run, and that is on the back of profit. Well, myself, I tell you, so of my 35 years of banking, right? Well, myself, I tell you, so of my 35 years of banking, right, across 7 geographies, 4 continents, I would say, Middle East, Asia, Africa, North America. I have seen many economic cycles, but one thing has remained constant. Gold always prevailed, right, in all cycles. So the real question is, why is gold safe and dependable investment, and why it is perceived that way, right? So we need to understand that, of course, gold is not just a shiny commodity. It's the ultimate store of value. Across time and civilizations, gold has never defaulted, never gone bankrupt, and never been inflated away. When confidence in paper money wanes, gold appeal grows. It is globally accepted, and more importantly, politically neutral. It's a politically neutral commodity and instantly liquid. You won't find these characteristics in any other commodity, right? And especially for, of course, investors and policymakers in this room, these characteristics are invaluable, especially in a market where inflation and FX volatility can erode wealth overnight. The recent gold rally is driven not by speculation. It is being fueled by in the opposite direction. When cost of living rises, gold prices follow. It tends to appreciate when inflation accelerates, preserving real value over time. Empirical data shows that during inflationary periods, whether in 1970s in the US or more recently during pandemic era money expansion, gold has protected purchasing power. This is exactly what we are witnessing now. In the middle of monetary easing cycles in advanced economies, investors are reallocating from currencies to gold. For Nigeria and other African economies, gold is not just a hedge, it's an inflation firewall. Gold offers a natural inflation insurance policy. Now, what about FX? Right. Currency risk is another big risk, especially for this region. Currency depreciation has been one of the biggest risks for investors in Nigeria. As Naira weakens, the value of gold in local terms rises. Well, another fact that we look around globally, right? Any asset category, whether it's real estate, stocks, bonds, fixed income, whatever, every investment category has propelled on the back of leverage, which gives you scale, right? So for investors in Africa, and Nigeria especially, who are holding local currency assets, FX risk is the biggest risk. For Nigerian investors and institutions, leveraging Naira borrowing to acquire gold can be a powerful strategy. And all the banks that Nere mentioned, FCMB and Sterling, etc., who are doing, that's local currency borrowing to buy gold. When Naira depreciates, the gold position appreciates, offsetting exposure, effectively creating a built-in hedge. Again, as I said, this is not just a theoretical model, but banks in this room have already done that. So these models can be scaled, definitely, to empower Nigerian banks and commodity exchange. And I will talk about commodity exchange in a minute. But even for retail and individual investors, leverage models drive savings and preserve purchasing power. How does this support central bank? Well, globally, central banks have been the single biggest driver of this gold rally. They have turned from net sellers to record buyers, a structural shift in reserve management. Why? Because gold offers, number one, reserve diversification away from volatile FX assets, an automatic buffer when local currency weakens, And 3, protection against external shocks. For Central Bank of Nigeria, accumulating gold reserves can strengthen financial sovereignty and enhance the nation's reserve profile without dependence on external funding sources. And I'm glad to hear from Nere that they have already started. Now, what does this mean for commodity exchange? Well, commodity exchanges ecosystem actually is a critical piece of this puzzle. Globally, investors are pouring record funds into bullion-backed ETFs, creating deep liquidity in gold market. By integrating gold more into fully like platforms like Lagos Commodity and Future Trade, LCFE, number one, we can create transparent local pricing and credible benchmarks. Miners, refiners, and jewelers can hedge exposures. Banks can extend credit against gold receipts, turning the metal into a financing instrument. This transforms gold from a passive store of value into an active liquidity engine for the Nigeria financial system. I don't know how many of us know that Africa produces over 20% of world gold, but captures less than 2% of its financial value. We export raw and import finished wealth. Therefore, what is needed is what I saw this morning, right? Improving refinery and vaulting capacity locally. I think it's a great initiative which K&S Smith has taken. They have shown us even the space where they can expand the capacity, etc. So I think that's the way to go. Launching gold-backed financial products, which has already started by a few banks, as we discussed. Enabling cross-border trade settlements under PAPS and AFCFTA. Leveraging fintech innovation like SANU to integrate gold into digital platforms. With global central banks accumulation at record levels and forecasts now pointing to gold hitting 5,000 by December 2026, this is the moment for Nigeria to position itself strategically. You know, to truly unlock Africa's gold value chain, I think steps we all know what we need to do, right? Government, central bank, commodity exchange, investors should have an alignment. And it's great to know that Africa Gold Council has been set up and that process has started. Because every major hub, whether Dubai, Singapore, whichever you take, right, has succeeded on the back of policy alignment and private sector partnership and execution. The last time the world faced this level of uncertainty was in 1970s, when gold prices surged 15-fold and reshaped global monetary systems. Today, history is offering us another opportunity, right? Imagine Nigeria reserves are not backed by dollars only, but by gold too. Commodity exchanges drive regional liquidity. Miners, banks, and policymakers making Nigeria price settler. Because gold is not just an ancient metal anymore. It is a currency of trust, the hedge against instability, and the lever of sovereignty. We have to seize this moment, certainly. Gold is an important pillar for Africa's financial future. So, listen, I'll keep it short because, of course, we have a session to discuss more in detail about whatever I have said and whatever Nere has said, more in a Q&A format. So we will do that. But as closing, I would just take a look as a banker. What I can tell you is that gold doesn't require credit rating. It doesn't require bank guarantee. It passes all the stress tests. So to me, it's a perfect asset for leverage. Leverage provides a scale, and for retail investors and individuals, it forces savings. You know, and we have discussed all the qualities of this category of asset, right? Inflation hedge and FX hedge and all that. And if nothing else works, honestly, gift it to your wife. That will give you the highest return. Thank you.
Thank you, Mohammed. I'd like to call up Samaila Zubari, CEO of Africa Finance Corporation.
So good morning, everyone. allow me to stand on existing protocols. So for me, my remarks are going to be very brief. One is just to say thank you to Nere and her team for making this come together, and of course to thank Mudassir, the colleagues at FCMB, Sterling Bank, and everybody that has made this work. So we've always been very interested in this asset because Africa actually has about 50% of the world's gold reserve, along with several other commodities like platinum, copper, cobalt, and everything else. And like Mudassir said, we are really just getting the mining value, which most times is less than 5%. So if you look at, let's say, an electric car, for example, the value is mainly right now about $7 trillion. And it's mainly from the minerals, platinum, copper, cobalt, graphite, lithium, and all of that. And that is just $12 billion. So if you look at $12 billion and $7 trillion, so you can see how tiny or insignificant the mining value is. If you move, let's say, 3 steps, 4 steps to precursors, that's about 240 billion. Imagine the step change. You know, it's the same thing with cotton, you know, that we're all wearing. You know, from the cotton itself to what we wear is about 20 times value. So our interest is in how to capture and retain most of that value on the continent. That's one aspect. The second aspect is the current changes that we see in the world, the geoeconomics, the geopolitics that we all have witnessed, and the shifts in the safe haven assumptions globally. And the fact that a lot of us, our currencies are linked to external sources that historically derived value from resources that we have on the continent. So for example, we've always known that gold was the benchmark for currencies. And it was when it couldn't be matched, you know, and when the need for fiscal expansion, monetary expansion, couldn't be tied directly to the dollar, that, you know, other fiat, you know, currencies and rules and systems emerged. But for us in Africa, that's not in our interest. What's in our interest is, you know, a utilization of the resource that we have. So we always have to think of how can we get more value for our resources? How can we craft systems and solutions where the gold we have, you know, has a lot more value to us? We shouldn't be thinking, which is why I congratulate all the banks, Sterling Bank, Union Bank, and all the banks that have tried to provide leverage for gold. We need to find a way to scale that. What we will do is that we have always financed the mining and development of gold, and we want to do a lot more of that. What we would like is to see this refinery become a success so that we can direct our other mining operations to be refined here. So we will do a tweak if we know that this works and we have all the certification it works. We'll do a tweak to our financing conditions. Instead of saying LBMA, we will simply refer to this refinery. But we need for the refinery to have the necessary certification that will allow it to be respected, because why we don't finance by ourselves, we typically crowd in other partners. And we like for them to feel comfortable that we're not, you know, putting them at risk. So it could be, you know, I mean, maybe we'll try with options, you know, instead of just saying one with this or the other, you know. So we would try to make that change possible. But in summary, it's just to say thank you and congratulations to everybody that's made this possible, to say that we're clearly going to support the value chain. We see this as an entire value chain. We're going to support the mining, we're going to support the exploration, we're going to support the refining, and as time goes on, we see how we can support the financing or liquidity arrangements around it. We'll see how we can provide that support. More especially for us is how can we get, African central banks, to have more gold reserves. Why? Because I think the US actually has the largest gold reserves. The US has the largest gold reserves. So the US with the dollar has a lot more gold as part of their reserve management system. Likewise, all the other advanced economies. So as Africans, we should also seek to acquire a lot more gold, and we should target, 15, 20, 30%. Why? Because we can get it locally. We don't need to move into other currencies to acquire it. So we should focus on how to have that, and then that will enhance the value of our currencies and enhance our capacity to be able to trade with the rest of the world. So once more, thank you and congratulations to everyone.
Thank you very much. For the next two remarks, there will be a short video remarks. So we will move the podium out the way and we'll screen those. So the first one will be Mohammed Sani Abdullahi, CBN Deputy Governor on Economic Policy.
Your Excellencies, distinguished ladies and gentlemen, I am highly honored to be given the privilege to make a few remarks on a topic of growing importance: gold for reserves and the Nigerian economy. This conversation could not be more timely, especially as Nigeria intensifies efforts to rebuild confidence, strengthen its external reserves, stabilize the currency, and chart a more resilient and diversified growth path. These priorities have renewed the urgency to rethink how we manage and diversify our reserve portfolio. This dialogue is also taking place against the backdrop of a global resurgence in central bank gold holdings. According to the World Gold Council, central banks purchased over 1,000 tons of gold in 2023, the highest level of annual buying in over half a century. The quiet but decisive return to gold underscores a shared recognition of its enduring value as a hedge, a stabilizer, and a symbol of trust in uncertain times. The global shift towards gold is also a response to heightened geopolitical fragmentation and uncertainty. As countries seek to insulate themselves from external shocks, sanctions, and currency volatility, gold remains a neutral, apolitical, and universally accepted store of value. An equally important trend in recent years has been the growing preference among central banks to source gold locally, particularly through artisanal and small-scale mining programs, ASM. This evolution presents a dual opportunity to formalize informal mining activities and to build reserves using domestic currency rather than depleting foreign exchange holdings. Well-structured ASM-linked initiatives can advance three policy goals simultaneously: reserve accretion, community empowerment, and responsible mining practices. Let me state that given Nigeria's significant untapped gold potential, we are taking deliberate steps to ensure that Nigeria's gold reserves are optimized to support accretion to the external reserves and create multiple strategic benefits. As players in the gold value chain, I urge you to support the ecosystem in Nigeria to develop a secure, fully audited gold system that will ensure traceability and compliance with international best practice. It is also important to entrench a transparent pricing and market mechanism. I encourage you to ensure investment in refining technology that will enable Nigeria to produce international standard gold. Distinguished ladies and gentlemen, let me add that gold is more than a metal. It is a mirror of national confidence and a pillar of economic sovereignty. For Nigeria, leveraging gold for reserves is not merely a technical or financial decision. It is a strategic step towards resilience, diversification, and self-reliance. It represents a pragmatic and visionary policy choice, which offers protection against external shocks, deepens the real sector, and enhances the credibility of our monetary system. But most importantly, it sends a message that Nigeria is ready to build wealth from within, to rely not only on oil, but on the strength of its natural endowments for the benefits of generations. By building our reserves with assets we produce ourselves, we not only strengthen our balance sheet, but also our sense of national ownership and pride. Let this roadshow lead us to a turning point, from seeing gold as just a mineral resource to fully utilizing it as a monetary asset that can secure our future. May the discussions today move Nigeria closer to an economy that is truly golden in potential, in productivity, and in prosperity. Thank you for your attention. I wish you a fruitful event. Thank you.
Next will be Gold for Africa's Economy by Yemi Kale, Chief Economist from Afrexim.
Distinguished participants, ladies and gentlemen, I am honored to have been asked to give these brief remarks today at the Kian Smith Gold Roadshow, a forum that I believe is happening at a defining moment for Africa. Across history, gold has always been more than a metal. It has been a measure of trust, a store of value, and a symbol of sovereignty. Yet, while Africa holds abundant deposits of this timeless resource, its true potential as a pillar of financial stability and economic transformation remains only partly realized on the continent. Today, Africa produces over 25% of the world's industrial gold production. Ghana ranks as the 6th largest producer globally, and countries like South Africa, Sudan, Mali, Burkina Faso, Guinea, Cote d'Ivoire, and Tanzania are among the world's top 20 producers. Yet, collectively, Africa holds barely 2% of global gold reserves. That paradox of high production but low reserves, however, tells a deeper story. We extract the value but seldom retain it. Our gold leaves our shores, but the financial trust and security it represents seldom stays. To move from extraction to empowerment, therefore, Africa must see gold not merely as a commodity for export, but as a strategic financial asset, one capable of strengthening national currencies, stabilizing reserves, and securing its sovereignty. Distinguished participants, ladies and gentlemen, we are living through what can aptly be described as a new golden era in the global financial system. In 2024, gold surged to an unprecedented high of approximately $2,610 per ounce, a year-on-year increase of about 25%. By the end of October this year, prices had climbed even further, approaching $4,500 per ounce. Distinguished participants, ladies and gentlemen, this is not a typical commodity rally. It is a structural revaluation of gold's role in the global economy. Around the world today, central banks, from China, the world's largest gold producer, to Poland, whose domestic production is negligible, have accelerated gold accumulation at a pace unseen in modern financial history. Their objective goes far beyond speculative gain. They are converting economic uncertainty into strategic insurance. They are buying credibility, sovereignty, and resilience, the intangible pillars that underpin national financial security in an age of global unpredictability. Indeed, the post-Second World War consensus that once supported multilateralism, open markets, collective security, and cooperative development is visibly unraveling. We are witnessing the rise of economic nationalism, a resurgence of protectionist industrial policies, and the weaponization of trade and financial instruments. Global supply chains are fragmenting, geopolitical blocs are hardening, and Africans have long understood. For centuries, African civilizations demonstrated a sophisticated grasp of gold's dual function as a medium of trust and a foundation for economic stability. One of the most compelling illustrations is the Mali Empire under Mansa Musa in the 14th century, which at its height controlled an estimated 40 to 60% of the world's gold supply. Musa is regarded as the richest man ever to have lived. His wealth was, however, neither accidental nor merely material. It was the product of deliberate resource governance, anchored in the control of gold-rich regions, taxation of trans-Saharan trade, and reinvestment of wealth into learning centers, trade infrastructure, and urban development. This legacy offers a powerful reminder that Africa once defined the global gold economy. Gold was never merely ornamental. It was a mechanism for statecraft, currency stability, and work for building a gold city in Cairo. These are, however, not isolated decisions. They are signals of a continental shift towards greater financial sovereignty. Gold is reemerging as a strategic anchor, an asset that restores policy autonomy, buffers economies against gold shocks, and reinforces trust in national currencies and institutions. In essence, the world is awakening to what Africa has always known, that gold is not merely a commodity. It is a strategic instrument of economic resilience, a hedge against strategic risk, and a timeless store of trust. Yeah. The current movement, therefore, presents Africa with an opportunity. Their refining, assaying, hallmarking, certification, and beneficiation must occur on African soil, in Accra, in Johannesburg, in Lagos, in Cairo, and across our mining corridors. And we are beginning to see encouraging progress. Ghana and Burkina Faso have commissioned new refineries, while South Africa's Rand refinery continues to stand as a continental benchmark in scale, governance, and global market access. But these are early steps. To unlock transformational and lasting value, Africa requires a coordinated, continent-wide gold ecosystem that integrates refineries, quality assurance laboratories, vaulting and custodial infrastructure, logistic trading programs and platforms, and export channels. Only then can we keep wealth circulating within African economies rather than transferring it abroad. Every ounce refined within Africa multiplies value, accelerates industrialization, creates skilled employment, builds investor confidence, and strengthens national currencies. In doing so, gold shifts from a mere extractive commodity to a strategic development asset. In this regard, Nigeria offers compelling examples. Tor explorations placed Nigeria firmly on the global mining map as the country's first listed gold producer, and is now expanding its gold footprint both domestically and across West Africa. Complementing this upstream success, Nigeria's Kian Smith refinery is now coming online, a model of integrated value chain development. It is supported by an independent ISO-certified assay laboratory, an independent vaulting and custodial management, and an international LBMA off-taker. But its significance extends beyond national pride. It reflects a holistic strategy that connects the mining economy to the financial economy. Kian Smith's structured gold buying plan integrate artisanal and small-scale miners, a critical and often marginalized segment of our mining sector, and is now onboarding large-scale producers to increase refining capacity and sustain operations. Critically, it has stimulated a domestic gold-to-market pathway from mining to retail, accessible to both individuals and financial institutions. This innovative Sanu digital gold product has further democratized access by digitizing gold and enabled fractional ownership. Accordingly, as the world moves towards the tokenization of real-world assets, Nigeria already has such a product functioning in its market, positioning us along with emerging global trends. Furthermore, Kian Smith's partnership with the Alternative Bank and the listing of digital gold tokens on the Lagos Commodities and Futures regulators and financial institutions across the continent to adopt and scale. If gold is truly to serve as a bridge between trust, value, and economic sovereignty, then Africa must take a bold second step to institutionalize gold as a continent financial asset. We must begin to envision and prepare to operationalize an African Gold Bank, a continental reserve institution mandated to pool a portion of Africa's gold reserves to support monetary stability, trade self-settlement, and financial resilience across the African continental free trade area. Such an institution will reduce Africa's dependence on external reserve currencies, enable intra-African trade settlements backed by real value, strengthen regional financial integration, and anchor an African unit of account in tangible, trusted value. Already, the foundations for this are already being laid. Afrexim Bank and other African financial institutions have begun advancing frameworks for gold-backed trade instruments, digital payment systems, and reserve pooling mechanisms, providing the technical scaffolding required for such an institution. Notably, Afrexim Bank is actively considering the establishment of a dedicated African Gold Bank, signaling a strategic shift towards leveraging Africa's gold reserves for continental monetary security. Institutionalizing gold in this manner will represent a historical reimagining of Africa's economic architecture, transforming our natural endowment from a resource of external extraction into a shared instrument of continental financial power. It will shift Africa from being a passive price taker in the global gold market to becoming a co-architect of a new Africa-centered financial order. Finally, and perhaps more importantly, we must build trust through transparency. Gold, by its very nature, symbolizes purity and clarity, and our policies on the continent must reflect prospers. Distinguished participants, ladies and gentlemen, in conclusion, let me emphasize that if Africa anchors its currencies in the trust that gold commands, refines and retains value capital for our development, we must envision an Africa where our gold no longer glitters in vaults abroad, but shines as a beacon of prosperity, innovation, and financial independence here at home. That, distinguished participants, ladies and gentlemen, is the true bridge between trust, value, and sovereignty. And that is the golden path to an Africa that defines its own worth, not in promises or potential alone, but in the purity of its purpose and the strength of its vision. Thank you very much for listening.
So we'll move swiftly on now to the interactive on the keynote address. So this will be led by Bode Oyetunde from the AFDB, if you can come up. And then some of the other discussants would be Mohamed Madasser Amre and Abubakar Suleiman and Bolaji Balogan from Chapel Hill.
Good morning, everybody. Great to see all the participants and see my older brother Samaila and others. Welcome. My name is Dr. Bode Tunde. I'm the Executive Director representing Nigeria, Sao Tome and Principe at the African Development Bank Group. and I'm also the Dean of the Board as the oldest Executive Director currently. To preface this conversation and to build on what Dr. Kale just said, just wanting to put up a few slides from some research we have been doing at the African Development Bank, also working with AFC and others. If we go to slide 4, well, let's go to the next one. So, well, the previous one, let's start there. We've been doing some research and doing some studies. We've got huge needs. One of the key issues, of course, is bridging our energy gap and trying to build the right infrastructure to ensure that our economies grow on a continent. If you move to the next slide, this is the sad paradigm. So what we find is other continents are saving their productivity, they're saving their wealth. So as you can see, the Asian economies particularly is saving up to 40-50% of their current GDP, that's their gross domestic production, as part of their savings, reserves in other critical assets, etc. And it's from that asset base that they're now able to invest to build their economies. Whereas that little red bar at the very end is sub-Saharan Africa. And that's how much of our GDP we're saving that's available for investment. So essentially what we see is we're leveraging off the wealth and in savings and investments of other continents to try and bring our own domestic economies up to a level of development and infrastructural excellence that we can compete globally. No continent has ever succeeded relying on the generosity of others, and this is the paradigm we see here. Now if we move on to slide 6, here we look at the richness of Africa. So we've got so much resources across the continent. As the slides show, for instance, Mali has tons of lithium. We have Guinea, which has the largest bauxite reserves in the world. Sierra Leone has that as well. Gabon is the largest producer of manganese. DRC and its cobalt. And all these are critical minerals involved in the EV, electric vehicle, climate, green growth value chains. And yet, at the end of the day, we're still back to what we're doing decades ago, exporting our raw materials and importing value added. So just as what Dr. Kale said recently, or just in his earlier remarks, this is the problem we're facing. And of course, we have gold in Ghana and Burkina Faso and South Africa. And yet, as Dr. Kale pointed out, our reserves are so minimal compared to the amount that we export and refine abroad. What does this mean? This means that we have a challenge of development. This means we have a situation where our current currency systems are not structured properly to allow us to retain the wealth from our endowments and use that progressively to drive the investments that we have to make over time. And what does this mean in practical terms? If we skip to slide, I think, 17. This is what it means in practical terms. So when this was shared with us in our group, it was very disheartening to see. So on the right-hand panel, you have what our securities are. If we had gone back to when we had the gold standard, or even further back when we had cowries and gold, and we had our own African kingdoms, not countries after colonial rule, etc., and where we retained our reserves in our critical minerals, in our precious minerals, industrial minerals. Over the last 15 years, you can see on the right-hand panel of the graph, that's where the value of critical industrial and precious minerals have gone, close to almost 200% accretion over the last 15 years. And yet our underlying currencies are the panel we see on the left, where you have, unfortunately, the Nigerian naira that's lost 900, it's been devalued by 900%. So basically, if you had 1,000 naira 15 years ago, what you have today in earning power is 100 naira. And yet the underlying economies have the strength of these commodities. Now, if we had moved, as Kale mentioned, as we're working with AFC and AFXIM, to a more commodities-based currency system, that's where our value would be. That's where our wealth would be. And that's where we'll be able to grow, to ensure that assets go into income, or income goes into assets, and the assets based are being able to use and capitalized to drive the investments we need to become globally competitive. If we move to, I think, slide 17, you can see the trends that we've had over the years. And This is unfortunately the reality of Africa, the boom and bust. So we had challenges in 2003, etc. Oil markets affected Nigeria. There was some stability, there was some growth, and of course, global financial crisis. When you look at the charts and what has happened to commodity basket of key precious industrial and EV minerals, they have grown. And yet we are going from boom to bust, particularly because of our dependence on oil and our inability to tap our critical, precious, and industrial minerals. And then if you now move to the last slide, I'll put up slide 18. You can see our value in terms of our currency, which is critical because we're borrowing large amounts, particularly Nigeria, for infrastructure, US dollars and hard currencies. And we're paying back with a weakened and depleted currency. Whereas if we had based our currencies on commodities and asset values, we would be moving towards that higher trajectory, the green line at the top. And this is the conundrum, this is the challenge. Now, it goes back to what Dr. Kala is saying, building the ecosystem. But beyond building the ecosystem for the mining and beneficiation and, of course, trading and reserving, we have to go further to build the commodity exchanges that allow us to trade and to dematerialize these securities and these assets into securities, deal with the market and counterparts and delivery risks and other things that other jurisdictions, not outside the continent, here in Africa, have been able to do. So if you look at jurisdictions like South Africa, they have a massive Johannesburg Stock Exchange and Johannesburg Commodity Exchange, trading 30,000 trades on one single commodity. Having that depth of market is what we need to get to. Similar markets exist in Kenya, of course, in Nairobi. But in Africa and West Africa, we have an opportunity, a potential to be able to create this. So I'll stop here, and then I'll let my co-panelists maybe speak their own minds in terms of what needs to be done and how do we get to where we're going. Or rather, let me put it the other way around. Where do we think we're going, and then what needs to be done to get there? So.
I already spoke my mind.
Thank you very much. Firstly, Nere and everyone, what an incredible journey, and really excited to learn more about this story today. I think we have an incredible opportunity in our markets, and that opportunity is really around how can we firstly crowd in more capital to support the entire gold value chain in this country. And this starts, first and foremost with how can the markets be used to scale a business like the refinery next door and pretty quickly. But also, how do we begin to think of getting a company like Thor Gold actually doing a secondary listing in this market? Thor's had a remarkable history in London, but in London it's a relatively small listing. In these markets, it would find really tremendous support. And I think the way that we build more capital for this asset class is really around investor education, creating retail products, whether it's gold mutual funds or gold ETFs. We've had a gold ETF in Nigeria for a number of years, but I think that for a variety of reasons, firstly, because the plumbing doesn't work very well around ETFs in the market, and we haven't set up the plumbing quite well. This product hasn't found tremendous support and should have grown a lot larger, and other fund managers should also have created incremental products. I do think one of the low-hanging fruits is getting mining companies listed on the exchange because gold has minimal exposure to FX, and effectively being exposed to gold is exposure to FX. And one of the big things I will be pushing over the next few months is how we get this metal can invest in, and these would just be investing in spot contracts, for gold contracts, for gold, and over time when people become quite familiar with the asset class, beginning, also to move them along the value chain into futures and options, contracts and other derivative instruments. The second opportunity we have in the market is that we have an incredible informal economy. And in many respects, I believe that Nigeria's informal sector is probably multiples of its formal sector. And when people think about our GDP, you think about this economy as a $300 billion economy. But all of the anecdotal and evidential evidence suggests that it's a lot larger. And when we see the increasing prevalence of capital opportunity to crowd in really significant capital, and this is a part of the market that has always understood the value of gold. They've understood it, as a store of value. They've traded it informally, and I think this is where our biggest opportunity perhaps is in terms of creating large retail products. I'll stop at this point.
Thanks so much, Bolaji. Just to build on what you just said, 2 points. First, of course, as a money man yourself, you know that capital is a very shy animal, runs away from risk, runs towards rewards. And what do you think we need to do in terms of trying to get to a place where gold and investing in gold, precious metals seems less risky and more profitable, given the fact that a lot of the pension funds are invested basically in gilts, the surest asset class in the economy, the government safety net in terms of the gilts and security and risk, and and delivery, etc. That's one.
I think the first key investment for me is this refinery. I'm incredibly shocked that this has been done very quietly in this country, because I think that quite a lot more money would have been thrown at it by a number of other people if they're aware of it. Standardization and effectively getting Nigerian refined gold accepted globally is really, really fundamental to this process. And we then need to create a plethora of products. These products have to be listed product, because I think that if it's unlisted product, the governance that comes with product being listed, the reporting obligations, the fact that there are all sorts of control processes around listed products, like the use of custodians, trustees. All of these things just help to build that trust quotient. And putting all those foundational blocks in place, by ensuring that everything is done within the constraints of a market. There's standards. People who behave badly, the market sanctions them. If you've ever defaulted, the next time you issue, the market doesn't support you. You build that really significant trust quotient, and that trust quotient is what then allows capital flow very, very quickly. And I think for asset-backed, instruments, there is, really no cap to how deep and liquid those markets can be.
And that leads to my second question, which you've already started to address, in terms of how does the regulatory framework and the regulators manage the tension between innovation on the one hand and proper regulation and protecting the market. You've been around the block many years. 20 years ago with the margin trading, and how it became so popular, and then of course it led to a bubble, and then it burst, and then we now had the pullback and the overregulation. And of course, the banking sector had to adjust, etc., in terms of splitting the risk-bearing assets, risk-bearing investment banking functions from the commercial and real estate. So how do we get that tension between innovation and regulation right to ensure we encourage the market?
I think the incredible opportunity we have is that this, commodity has been traded for a couple of 100 years on other exchanges and other markets. The standards, are fairly well set. We don't need to reinvent, those standards domestically. But, what is also really, really fundamental is to get a broader amount of participants in the ecosystem. Any ecosystem for any product, is, effectively built around the buy side, intermediaries, sell side, and I think one of the pieces of work that the commodities exchange needs to do is to get a much broader range of traders and participants in the market. Banks are now, willing to provide liquidity. I think investor education as well as ecosystem participant education is non-negotiable. This is the beauty of a fora like this. The more people that, understand the product, understand how it's traded, understand the structures of the market, understand, the risk management, the more, that capital will flow. And the bank is beginning to, build up its reserves domestically. If Nigeria's pension industry was allowed to put 5% into gold today, that's already $1.3 billion, of capital in naira. That's 1.9 trillion, of capital very, very quickly that can go. And what an incredible impact that would have in mining communities, what an incredible impact, that would have in the entire value chain, in this country. And these are things that can be done in weeks rather than years and months.
Let me bring in Amri into the conversation. I know you spoke earlier, and I'll start by telling a story told by your colleague and my colleague, Farouk Gumel, who is one of your execs in the Chi Group. And one thing working with Farouk for many years, I was always struck by was how imaginary some of our borders are and how real some of the other issues are. So he had the example, of course, of him trying to get across from one country to another in West Africa and being stuck by customs and having this and that check. And then Malam is driving with a little bicycle with a goat on his back. For him, no borders. And the issue of trying to integrate into the Africa continental free trade arrangement. And then in this case, in terms of trying to get our gold standards and commodity trading space up to par so that we're easily tradable across the continent and integratable into the world. And sometimes we have these barriers in terms of our regulations that sort of limit the way we can access other markets can access us. But at the same time, you do need some level of regulation in terms of inter-country governance. So asking you, having the size of your group and how you see Africa as a whole, at the same time, different countries, where do you think the right balance is to be struck between not complicating things too much, but getting the right sort of frameworks in place so that the markets grow, the markets integrate, and we get to a level where we can also interact, access capital from other countries, but we can also trade across boundaries. So,
yeah, thank you. Yes. So listen, first of all, there is no perfect solution. We have seen in all commodities and all products, yes, you can achieve that kind of synergy that you are talking about, but still there will be some. I think the right step which has already been taken is the Africa Gold Council, which is right the right forum which will drive all these things. But I would still say that this is a new phenomenon, or although this gold as a product and as an investment product has lasted for civilizations. But this realization and the significance that it's getting is pretty new. Primarily, it started from, I would say, 2022, right? Once this G7 seizure of Bank of Russia assets, right? That's when emerging markets realized that they need to diversify from dollar, right? Because of what can happen. And that's where this gold phenomenon as an investor class has grown. Because it has its own weaknesses as well. Although we have talked about all the strengths, which is safe, dependable, inflation hedge, FX hedge, but it's still one, not weakness, but the limitation is that it's a non-revenue generating asset. Right? So with all these qualities, will you invest 100%? Answer is no. You need to have a balance. Yes, this is a very good insurance policy for FX and inflation, but at the same time, you need to have a portfolio which gives you return, which gives you growth, at the same time insurance policy. So I think that realization has now happened all over Africa and globally as well. I think institutions, whether it's insurance, pension, central bank, etc., everyone is going for that balance. And that balance, as of now, I think it's 15 to 20% gold. Maybe you go 30 to 40% in more growth assets and 30 to 40% in more revenue generating assets. So this itself is driving demand. Right? Now, the positive thing that I look at here in this context, Nigeria, is that of course we have gold here. I don't know the capacity, how much reserves we have, but of course it's reasonable, decent. I'm assuming we have this refinery now, which has come on place. So this is the right step. With this refined product, if we encourage and you need transparency, right, which comes through the listing products that he spoke about. So I think all of this, the good thing is realization has happened and work has started. So we will reach there.
So building further on what you've just said, in terms of now trying to deal with the ecosystem, your group has invested hugely in the ecosystems and the communities in which you do your operations, where you grow your crops, etc. And this is a huge issue. I was speaking with Somalia, I think last year at Morocco, and one of the key issues that they've had is just trying to be able to engage with the communities and move from that informal trading to now formalizing and then getting that structure up and running. And also making sure that it doesn't become a problem for the community in terms of environmental degradation, in terms of attracting militants and other unsavory attention from herdsmen, etc., the security side, and as well as creating the meaningful jobs and also improving the livelihoods and the basic issues around the community's health education. It might be useful maybe from your perspective as you've really been very strong in doing this and backward integrating into your communities, to sort of indicate what you feel may need to happen in these areas where you now start focusing on the extractive and beneficiation ecosystem.
Yeah, thanks. So listen, of course, sustainability is one of the, strongest focus that we have as a group, right? And the commodities that we deal in, there is a very, I would say, significant value that communities provide. So of course, we work with them, we provide whatever support, etc., that we provide with them, right? Now, in this particular aspect, of course, refining and mining, right? There are two things. Now, from a mining, refining is not that complicated. It's simple. From mining perspective, of course, that's a bit complicated. Now, I have not spoken on this topic with Kian on this, but we know some of the challenges in these communities, right? Both from security perspective and from sustainability, from environment perspective. I don't think gold mining is as intense from an environment perspective as some of the other like oil, etc., right? So it is still manageable. Of course, from a security angle, it will be slightly more complicated. But listen, there is no other choice. And we were already doing it, by the way. So we were already doing the mining, but we were exporting. With this refining, the only thing is that we are now retaining the asset in-house, right? And providing that opportunity to your investors to invest in local currency in an asset which is benchmarked to foreign exchange, right? So I think I only see these positive steps already taken, and yes, of course, it will take some more time to refine it further. Yeah.
And then maybe going back to Bolaji to take on the financial markets aspect of this. Looking at other countries that have developed some minerals, for instance, we had the diamonds and
Set what I would describe as, how we can use additive value, an additive value in these communities to bring greater prosperity and to be less, focused on what I would describe as, the hypocrisy. Because when you and I talk about blood diamonds, these diamonds are traded by global companies. Ultimately, are traded by global companies. Ultimately, they find their way into global. The U.S. CIA as an example estimates that underneath DRC soil, there's $24 trillion. Of minerals at mining value. Now, what that means is that at beneficiated value, that could easily be more than all of the money that sits in global asset managers, which is somewhere around $140 trillion. Yet, 8-9 countries globally, have fomented instability there. And if you allow them in Nigeria, they would do the same, quite frankly. And there are 9 countries, who surround the DRC. So it's one of the 2 most significant countries in the world, with a land border. What do you want those 9 countries around them to do? It's like when you watch one of these discovery type channels, and you see a lion bring down buffalo or something, and then you see jackals and hyenas running around its food. Everybody sees that food. And what we have to recognize and to do is to ensure first and foremost as Africans that people will only be able to come and sit at the table and share in that food with us on our own standards, not on their own standards. And that simply means first and foremost that we have to be respectful of the communities from which this food is coming. The communities must be, a part of the prosperity that is derived. Security in most of Africa is fundamentally prosperity driven. The only way that happens is that we process, we refine, we mine these products on the continent. There's some products even in Africa where the market for it, the global market for it, should be sitting in Africa. And you talk about an agricultural commodity like cocoa. Why do we trade cocoa internationally? Why don't we trade cocoa in Africa, in an African currency? And the rest of the world has to come and buy cocoa, which 75% of the resource comes from 3 African countries, Ghana, Cote d'Ivoire, Nigeria. If everyone had to pay for cocoa in Naira, or they had to pay for cocoa, in Ghanaian cedis, what an incredible impact it would have on their balance of trade, on their balance of payments, what an incredible impact it would have on currency stability. So I think as Africans, we've now spent so much on school fees globally, and we've all now gone to school properly. we now need to wake up and fix, our current and our future reality. And this country, this continent, has no excuse to be poor.
Is there a way we can translate our education into an entrepreneurial education that will set the background for us moving away from grammar into business, and then utilizing the resources that Africa has for the betterment of Africa? Translating chemistry into business or physics into business is a skill that has to be learned. If I say to anybody, what is pH? What does it mean to my mom? It's difficult to say what it is. But the truth is, there must be a vehicle to translate our education, the education in Africa, into entrepreneurship. What should we do?
Thank you. So we've got one on skills and actual vocational skills, adaptation, etc. We've got a gentleman here in front. Maybe we'll take a few questions before we come back to them.
Good day, ladies and gentlemen. Mine is not actually a question. It's a comment on a standout phrase, standards of convenience. I think he's hit the nail on the head. It's something that is really, really on the forefront of discussions. So we're now dealing with the commodities end of it. I just want to make it known that a quiet revolution is occurring on the exploration and mining front. Our current Minister of Mineral Resources, Mr. Dele Alaki, has managed to form an African Minerals Strategy Group, which is composed of all the ministers of mining in Africa, and they are achieving giant strides in getting Africa to formulate its own standards. So, for example, in the old days, it was always either JORC or NI 43101, but now a Pan-African reporting code for minerals is in existence, and we hope to see it adapted or adopted across Africa, and whereby it's an African standard that we follow and not something that is dictated from elsewhere as a standard of convenience. Thank you very much.
Thank you, sir, for that comment. Can we move to that side, see if there are any, maybe one or two, and then we can come back? Going. Okay, there's one.
Thank you very much to the panelists. My name is Femi Babem from KPMG. We've said a lot about how gold should become the reserve currencies for central banks. And this is a conversation that has been going on for a long time. And the question I always ask is, it's impossible that the regulators don't know about this. The CBN would probably know. So is there some underlying factor that is really limiting the ability of the central banks or the banks to really hold these assets, as a reserve currency? Are there geopolitical threats, or what exactly it is? I think understanding what it is will help, then seeing what policy or what strategies can be used to.
Cross everywhere. I don't know how much CBN is buying, but definitely they have also started the process. It's a new asset class, so banks are taking it. Now, again, as I said, look, for example, if CBN has 43 billion reserves, right, $43 billion, should they buy everything gold? The answer is no, because you need a revenue generating assets as well. So there will be some balance to it, 15, 20, 30%, I don't know. whatever they have decided. But the process has started. Buying is going on, which is driving this rally. And you will see by next year, or you may the year after, when you analyze the reserves, it will be very different. It will be a very balanced portfolio of reserves of especially emerging market central banks. So that process has started. Of course, there are complications in terms of physical vaulting, physical security, movement, logistics, then ETFs, paper gold, all of that. So that thing is going on, and as I said, you will see difference very soon. Thank you.
Thank you for that really excellent question. And I truly believe that two things will drag this country kicking and screaming out of poverty. Entrepreneurship is one. The second is innovation, financing 7-8%, SMEs in their total lending. And the most fundamental thing that makes it difficult to finance SMEs is people look for collateral or you look for experience. And both of those things disqualify, young people, and they also disqualify women. So we have to recognize the incredible opportunity, firstly, that capital markets and asset management vehicles can bring for creating long-term pools of capital that don't have the same risk weightings and issues that banks need to deal with, don't have the same credit ratings, that banks have to deal with, and the reason, why it's preferable to lend to larger companies. But we also have to recognize the incredible opportunity that really large businesses can play in what they do with their value chain. And excellent example here is what TGI Group, and really good to see in the audience Mr. Savara, does with its value chain in agriculture. And through outgrowers schemes, effectively what are you doing? You're creating a raft of entrepreneurs in agriculture. You're creating a raft of people who own their own businesses. And something must be said for countries which have developed, very quickly from an entrepreneurial perspective. They built and encouraged a series of really, really large businesses who then use their own value chain, basically to sprout and develop innovation. The final thing that is really, really important is you cannot build an entrepreneurial culture if we don't have larger pools of domestic savings and investments. The pension funds, which are predominantly our only large pool of domestic savings and investments, by their nature have to be quite conservative. So one of the things that the government needs to think about is to look at models that have worked. And, after the end of the Second World War, the UK had a significant problem, with entrepreneurship and financing entrepreneurship. And there were two fundamental things that the UK did. One was to utilize, listed investment trusts in capital markets to raise a lot of capital, and you'll all, or some of you may be familiar with a business called 3i, which was really, the foundational vehicle used, to finance a lot of British entrepreneurship. But the second thing was also to create tax.
2 points. First, going to what Balaji just said. African Development Bank, we're working closely with AFC, Afrex, and others. Development Bank, we're working closely with AFC, Afrex, and others. And what we've been doing is trying to focus on entrepreneurship, SMEs, and women. But it's difficult because, as Balaji pointed out, the banks are geared to profitability and away from risk. So we do this through lines of credits we give to Zenith, UBA, to GTB, to many other banks across the continent as well. And then also try and encourage them to also backward integrate and buy from local communities and build that. And that's, of course, similar to what Chi has been doing successfully. So that's something that needs to happen. The challenge, of course, is it's difficult in real life. Life is stochastic. Problems have real issues. And what we find is we are all chasing the same women entrepreneurs that are getting all the love and all the, because everybody wants to target them. But the others in the next generation are neglected, and the issue is perceived risk. And this is something we also have to think of how we can address. And I think this goes back to what the gentleman said about skills and trying to get that sweet spot where you have the risk-reward trade-off balanced. But you also try and work with people that do not have as much capital or as much experience. And through mentorships and other processes, you can bring these communities and these businesses up. And then the second thing is also back to what Amre said in terms of the inflection point for central banks. But the inflection point has happened, it's now beginning to bear fruit because people were prepared. So I remember then when I was in another life working at the villa, presidential villa, when we had our 2017 budget implementation program, and we had Ken Smith, 2007, giving one of the 2 mining licenses that came out of a process we called labs. And it's a long road since then. If you talk to Neri and her team, they know what they've gone through over this decade. And while some people may see it as well-kept secret, it's because they were really grafting in the darkness and coming to a place and trying to see where we can get other businesses to come up through this ecosystem and then get part of that whole value chain so that a lot more beneficiation, not more value added can occur on the continent. And then we don't repeat for gold the mistakes we made for cocoa. So those are my 2 bits. I'll like to let my panelists maybe give their 2 key thoughts in terms of where we want to go and what do we think we need to be done immediately to get there.
I think first and foremost, using capital markets. Capital markets, when you understand their power, an incredible strategic weapon. And if you think of, the history, the culture of entrepreneurship in this country, the businesses that have sustained, that have survived, that have grown, to a large extent use capital markets. And capital markets doesn't mean listing. Issuing bonds is one of the easiest ways, to approach, capital markets, and this is an incredible opportunity to scale very quickly. Second thing, I would say is that in this whole process, we must have a very, very strong perspective on sustainability. And sustainability just means, building, thinking, financing, always with the future in mind. And if we have a long-term view and we're all long-term greedy in a value chain where there's a lot of money involved, I think that Nigeria and the continent will be the better for it.
Thanks so much.
We get into everyone what each family member is doing. So he has my entire investment portfolio. He looks at his mom wherever she is spending, and my elder son and brother and whatever, right? Just last week he told me, in our house, the smartest investor is mom, who is a housewife, by the way. So I said, how? She said, I have seen the MTM of her investment, and she has the highest return. Because what she does is, while all of us, meaning financial kids, do property and do stocks and this, every time she has money, she buys gold and she never sells. She only buys. So the return that she has calculated. So basically the message is that this particular asset, and look the 30-year chart, 40-year chart, you will see a secular uptrend with technical corrections only. There is no downward trend. It's only technical correction that happens. Otherwise, graph is constantly up. Of course, no asset goes in a straight line. It's always this. So that's the message that, of course, we have to do, at an individual level savings and buy local gold. Now it's available in Naira, local gold. There's nothing like it. Thank you.
Thank you very much for that rich discussion. Okay, so we've lost a lot of time, so we've got to tweak the schedule just a little bit. So what will happen now, we'll take a short comfort break, 15 to 20 minutes. Please help yourself to teas and coffees and refreshments just here. Anyone who didn't collect their name tag at registration when they arrived, they can do that now. And we will resume in 20 minutes for the next discussion, which is discussion 1. Thank you.
of gold is going beyond its traditional purpose of store of value, and there's a transit for gold to becoming a key part of the financial system. The bankability of gold cannot be overemphasized at this point in time, and it has to be, sort of integrated along evolving markets, as you see. So gold itself is critical to banks, financial institutions, multilaterals, ECs for purposes of economic stability, reserve management, or key roles of the central government. I have two incredible gentlemen with me. I have from StoneX and also have from LCFE. Their profiles are already in the program of events. I'm sure you'll find them very, very interesting. So I'd like to start with StoneX. I'm sure a couple of people know StoneX here, and they are, StoneX is what I would call a beyond gold organization. It's a precious metals company, operating globally and also continentally. I'd like us to tell us what your role is in the global precious metals space. What has StoneX been doing? That's the first part of the question. Thank you.
Thank you very much. And first of all, thank you for the invitation. It's great to be here back to Lagos. Always nice to visit. My name is Juan Pablo Garmendia from StoneX, and I'm the strategist in the desk in charge of emerging markets. So for the people who doesn't know who is StoneX, I would like to give you very, very brief introduction. We are we're a 5 billion market cap company with headquarters in the US, in New York, with over 5,000 employees across 85 plus offices. We are the largest non-bank financial company out there and one of the biggest precious metals house in the world, trading around 4 tons of gold a day and also around 5 billion in financial transactions. So StoneX's main purpose is to connect their clients with global liquidity, risk management, and also overall with the international market. In the precious metals in specific, StoneX it offers a full range of products to their clients that goes from physical to non-physical. For example, in the physical, we offer to our clients coins, bullion bars, refined products, but also we offer the vaulting, the storage, as well as the derivative transactions. So basically, we offer tailor-made strategies to help our clients mitigate its risk against price volatility, as well as optimize results.
Thank you. Interesting. You took some words out of out of my head, because gold itself as a commodity, like most commodities, crude oil, tin, those sort of things. You have two parts of the market. You have physical and derivatives. So eventually I'll come to you. I think with exchanges, we'll talk about how we can trade, these sort of assets and how we can, sort of convert same into monetary instruments and in terms of settlement. But so far, tell me, what have you done specifically? What specific steps or activities have you undertaken on the continent? You could break it down into, subcontinent, sub-Sahara and all that. Thank you.
Yeah, thank you very much. So StoneX is not new. And now getting to the topic that the panel is looking is on the gold side. What we have done in the gold side. We have partnered with tons of, with a good amount of central banks, as well as large-scale miners and refineries. But I think the part where I want to emphasize is that we are the largest financial institution engaged with artisanal mining. And why is this so important? Is because we have a special focus to support the artisanal and domestic refinery. Why? Because this will improve the traceability the formalization, and we will give access to the bullion markets. So I think what with the central bank was gold is a place to look at, plus gold is a place that other central banks are doing. For example, Ghana, right, that you can see how the market has grown in the last couple of years. Tanzania, for example, Ivory Coast, even Ethiopia. So we have urged the central bank here in Nigeria to start looking at it and start following the steps that other countries have been doing. And one of those steps is formalizing the artisanal and small mining. So StoneX remains a trusted partner here, and mainly a trusted bridge of the domestic and of Africa and the domestic players with the global economic environment.
Thank you. You know, it's interesting when you ask, you know, if you're doing some sort of survey around knowledge of the exchanges you have in Nigeria, I think a lot of people would stop at the equities exchange, i.e. the stock exchange. It's interesting that we've had commodity exchanges in the past. I think at the point we had Abuja Commodity Exchange. And thankfully we have the LCFE. Now the LCFE has two critical advantages. One, it's situated in Lagos, which is the commercial nerve center of not just Nigeria and probably West Africa. And then, you know, this is a West Africa or African roadshow, continental roadshow. So LCF is positively situated, or, you know, has a comparative advantage. Now, the question I want to ask is, firstly, how have you been able to, you know, sort of put your exchange, you know, pushing it out, the information for people to know this sort of exchange exists? And then secondly, on the commodity itself, how has it been trying to onboard gold as an asset class that is traded on your exchange? Thank you, Aki.
Thank you very much. I think the question you're asking me is like, what has been going on in a commodities country in the last 60 years that we don't have a thriving commodities exchange? 7 years ago when we started this project, we realized that we were going to do a lot of heavy lifting. There had to be a paradigm shift, and we had to build up a stakeholder ecosystem that will participate in that particular space. You know, when you have an environment whereby everybody is traditionally used to trading in equities alone or fixed income alone, you're going to have difficulty to speak to those stakeholders to start looking at any other asset class. For example, in Nigeria, it's very easy for, if you have share certificates, you can take it to a bank and you get a loan, and they'll put a lien on it and you'll be able to go through. And even in school, when people are being thought about to have a balanced portfolio, you'll see fixed income, cash, and equities. Rarely do you see them speak about you putting money in other commodities. And then, but recently, people have started seeing that there's been a very, very big situation in the issue of inflation, and the only asset class that's been able to beat inflation to date. It is coffee, tea, cocoa, and they're doing thriving very well. So the first thing we had to do was, and they're doing thriving very well. So the first thing we had to do was, we have to look at how do we create the paradigm shift. That's where the heavy lifting is. And the paradigm shift has to do with the fact that the people in the ecosystem have to come to power to agree that it's possible for this to take place. The first set of people that you need to go after will have been the regulator, SEC. And then the regulatory framework for SEC had focused on fixed income and equities for over like 40 years. And that means by default, the personnel in that particular space also will have more focus on the equities and fixed income market. But fortunately for us, during that period, the Commission put together what we call a 10-year master plan for the capital markets. And part of the thing that they wanted to do in the capital market in the 10-year master plan was to create the commodities ecosystem and to build a non-interest banking space. And both of them are now thriving very well. Now, to be able to put this together, the first thing that you need to do as a commodities exchange is the rules. The rules then govern how the commodities ecosystem will work. When we got in the first set of rules that we saw
was like a 4-page document. By the time we finished our rules, we had like almost like a 97-page document. And then that alone took about, I think about 9 months for us to be able to get approval, because you had to look at it step by step. I'm just speaking about the issues. Now, the good part of it is that there is an existing infrastructure in place to support commodities trading, which is already in place. The first one is the interbank settlement arrangements, you know, for us to be able to do trades through banks, and it settles through the NIBs. And we have an existing depository, which is the Central Securities and Clearing System, hacking legal back into what we call the warehouse receipts now. So the warehouse receipts are now bankable now there. Then also it redefined what the commodities to be. Then the commodities was defined as grains, maize, and all that. Now the definition now goes to solid metals, electricity, liquid products, and all that. Then also it redefined what a warehouse should be. A warehouse there was like a go-down building. Now the warehouse can be a tank farm, can be a mother vessel, can be a liquid tank, can be a vault for gold. If that legislation was not there defining what a warehouse could be, that legislation was not there defining what a warehouse could be, like the vault for gold, it would be very difficult for us to issue what we call a warehouse in Nigeria. Particularly for Nigeria, you know, by way of provenance, you can easily trace gold as from Nigeria easily. We pitched to them, but they cannot invest in any asset class that does not come under the revised rule of PENCOM. So we wrote to them about 3 years ago. It took 3 years for them to come up about 6 weeks ago to approve new asset classes, commodities, which covers like gold and all that, for the PFS to be able to put money into it. And now we are now trying to push that narrative now for them to be able to start participating in that space. Then we also wrote to the Central Bank of Nigeria to ask whether they will be able to vault gold for the PFAs. Because we realized that if the PFAs start buying gold, when it's about 10 billion, okay, 20 billion is okay, 100 billion, still okay, 500 billion, well, still okay. But when it starts entering 750 billion, which is bigger than the balance sheet of some banks, then you now start looking at a risk aspect of it. So what we agreed on was that if the central bank can decide on its own to start vaulting gold for the PFA for the bigger sizes, it will make it easier and give more comfort to the PFAs to be able to participate. So effectively, we have done what we do in the gold space. You have to come up with a reinsurance arrangement, which is a second layer cover for the transaction to take place. So you see that we have to build a whole ecosystem. And I'm happy now that today, having built all now, we're now seeing the stone coming up now. We're seeing the key and Smith coming up now. It's going to be easier now when they come to list on the exchange, and then we know where the vault is. We have a safekeeping receipt. There'll be no comfort for the amount that's been freed up from the pension assets, which is about, like the Bolaji mentioned earlier, about $1.3 billion to move into that space now, and there'll be comfort, there'll be reassurance that no money is going to be lost in any way.
Brilliant. Interesting things from your presentation, your submission. I like the idea around what I'll call synergy or cooperation between what I'll call dependent agencies like the CSCS, SEC, and those sort of things, SEC regulator. Now, is there some sort of integration? Because the players on both exchanges are basically the same, i.e. in terms of the brokers. A lot of them, the individuals were drawn from the NGX.
To have a vibrant economy of vibrant manufacturing, to have a vibrant economy of vibrant manufacturing system, you need the raw materials, and the raw materials, the commodities part. Now, by way of expertise, the brokers that trade on in the equities market are trained to trade in the equities. So what we do is we select them and send them for additional certification for them to be able to understand how to trade in the commodities space. And when that certification is done, it makes it easier for them to trade. Now, in the global space, you know that gold is not a local asset. It's an international asset. It will reflect on the price of the international community. When we started gold about 5 years ago, one of the biggest challenges we had then that we could not move forward was the dual pricing of the naira, because there was a parallel price, there was a central bank price, and then we had to align with the central bank price, which is almost looking unprofitable for people that wanted to trade. It created arbitrage. But the moment that there was an alignment of the two pricing for the currency now, and then between the parallel market and the normal market, we discovered that gold started picking up, more people were able to do more of that. So for the international markets, yeah, there's so many Nigerians abroad that would rather invest in gold, particularly the demography of the young ones that are coming up now. They're looking at gold from the angle of tokenization, blockchain. They want to put their monies into it. And some of them are in diaspora. Then you have the diaspora people also that want to come into the country, that rather want to do something that's more stable. They don't want to lose any money at all. And they don't want the fluctuations like we all the volatility in the equities market. And then you will see, like you mentioned, that later we'll start seeing what we call the dual listing of products. We have a country that's come to meet us and has told us that we will want a dual listing of your lithium. It's called Nigerian lithium in Nigeria and our country. So we're going to see dual listings of instruments like gold between Nigeria and in other countries that might show interest on other exchanges for us to be able to do that. And that will allow for us to be able to have cross-country tradings all over. And then particularly the intra-Africa trades, whereby we can do it between Nigerians and other countries in West Africa and a Pan-African position, whereby the exotic currencies in Africa will be able to be integrated into this new Africa Free Trade Charter for us to be able to have a bigger, robust intra-Africa trade. So if you visit the federal government, what the federal government has been speaking about now is the $1 trillion economy. And they're trying to focus it on Africa for now to see how we can build that.
Brilliant, well said. Now, dealing with countries around the continent, I'm sure you've been saddled with...
and I think the market should acknowledge that and recognize that. So, and not just that, the market has evolved quite a lot from seeing South Africa in the previous years as the market, as the most relevant country in gold. Now you see Ghana, as I said, right? Ghana, Cote d'Ivoire, Tanzania. You see new players and you see new relevant, new countries coming out to the market and with increasing the production quite significantly. But it's not just that they have increased production just like that, right? They have done a lot of relevant jurisdictional reforms and legal reforms in the countries. So I think that one has been one of the main changes. And a little bit what we have seen is a lot of central banks have become more active in this in the market by aggregating the artisanal and small mining, and then being able to offer better price as well as better products to these small miners. So what we have seen is in order to tackle smuggling and to order to tackle gold leaving Africa in an illegal way, central banks have become, and governments, federal governments have become a lot more relevant. So that tells you a little bit, because if you think about it, if you are just a small mining company in the middle of Africa, right, you don't have access to markets, you don't have access to derivatives, you don't have access to hedging, you don't have access to international prices. So really, you don't have, you're not playing in a fair market. But when the central bank aggregates, or when the federal government aggregates this gold production, suddenly it becomes relevant. Suddenly everybody wants to offer you products, everybody wants to offer you strategies, everybody wants to offer you funding, and that changed the way you play and the way the rules of the game. So, as I said, I think we have seen a lot more of this. Governments becoming more active, changing and being changing some of the regulation. For example, we have seen some countries where they are suspending the export licenses, so you don't are around smuggling gold, and that has come with a lot of good results. For example, we have seen also in Ghana how they are tracking the machinery, right, to see where does it goes, how does it operate, who is using it, and that has resulted in a very positive outcome.
Interesting indeed. Now, Akin, yeah, when you talked about warehouse receipts, so as bankers, we look at, classification of sort, where the money is, as they say, we'll follow the money. I think it can become a discountable instrument, where it can be traded between banks, and if it's probably packaged well, it can become a sovereign instrument. Like I always say, the bankability of it depends also on the sort of information that is out there. There should be more interactions between traditional DMBs, commercial banks, and your organization, those sort of things, so that this sort of information can filter out. Because the depth of the market depends on knowledge, rather than, just it being said at seminars or fora like this. Before, I have a couple more questions, but I'd like to take some questions from the audience. Yeah. Questions from the audience, please. I thought the conversations have been interesting. Okay. It's well understood. Okay. To wrap up, in 1 minute, final take on the conversation. Okay.
Good afternoon, everyone. My name is Frederick Fayomi. I'm the CEO of Technology as well as Blackground Resources. So my question actually is, it's wonderful to see what federal government and the Solid Mineral Ministry are currently doing in the space of developing. So having looked at a framework from the regulatory point of view, I know a regulation is not really favoring digital currency at the moment. What do you think needs to be done? It's great to
It's commodities or fixed income. Another way to also look at it is in terms of regulation. I understand regulation is still evolving in that direction. We're still on the learning curve. Regular banks, or the populace is still used to banking in traditional ways. So with the licenses and information and consultation that I know that is going on, I think we'll arrive at a point where what you seek, we will find. And it's all part of the learning curve. So it's something that, I can assure you, there are organizations that are thinking about it. Where we have, for instance, today in terms of payment systems in banking, for instance, 3 years ago we're in there. Where we'll be by the end of first quarter with the capitalization exercise happening locally, you'll see a lot of investments in technology infrastructure.
And we've been doing that for 5 years. And we've bought a bunch of gold, but there are challenges. And the central bank has purchased, I think, around 3 times now, and we've settled that bill, and it's going well. But I just wanted you to know that that program is ongoing. And recently, after pitching to the World Gold Council, for the first time, Nigeria has also been invited to the Executive Forum in Basel, just to continue to share this story and see how other countries can learn from us in this direction. So in terms of ASGM formalization, identifying mining clusters, and seeing how we can create an alternative market, for the artisans so that they're not stuck with only the black market. We've been doing that for a few years, and I think it's very commendable. I just wanted to let you know that. Thank you.
Thank you. Okay, your 1 minute.
Yeah, so I would just like to emphasize that Stonix is here as a partner, use all our capabilities. Banks can have access to hedging funding that they can deploy after to mining companies. We are also here to help the central bank with prepayment structures and funding structures. Also, Stonex as part of the World Gold Council Task Force in integrating the artisanal mining and also improving let me just before I forget improving the standards, the right word, standards on the small mining. We're also here to advise and helping whatever we can. So look at us as a partner and use the capabilities, leverage from us, and we're here to help as much as we can. Thank you very much.
Thank you. Thank you very much. Akin, your 1 minute.
Thank you very much for the gentleman that, yes, there's a lot going on. People are looking at tokenization, and people are looking at stable currencies, fiats, and trying to see how they can convert them. A lot of people are already doing tokenization, like is mentioned. The new YSA now reviewed allows some of these new assets to come up with a particular ceiling to which you can do at any point in time. And I think the other part of it is to make sure that what he had said about banning exports on gold being moved out of the country, I think it's going to be a welcome development so that a high level of beneficiation is done locally before that, and to forestall this illegal movement of gold out of Nigeria. And then also the Commission SEC, I think on permanent basis, is still engaging with the various stakeholders that need to participate in that particular space to make sure that we take gold to the level that is called
In a world where the value of money is ever-changing, Sanu introduces a revolutionary way to secure your wealth. A digital platform for buying, holding, and trading gold and silver anchored in cutting-edge technology. No more worries about the physical handling and storage of precious metals. Sanu makes it simple and secure, directly from your phone. Trade anytime, anywhere. With real-time market data and transparent transactions, you're in control of your investments. In Nigeria and beyond, Sanu connects tradition with technology, transforming the way we think about gold and silver. Backed by rigorous audits and secure custody, your assets are always safe and accessible. Sanu, securing wealth and simplifying trade. In a world where the value of money is ever-changing, Sanu introduces a revolutionary way to secure your wealth. A digital platform for buying, holding, and trading gold and silver, anchored in cutting-edge technology. No more worries about the physical handling and storage of precious metals. Sanu makes it simple and secure, directly from your phone. Trade anytime, anywhere. With real-time market data and transparent transactions, you're in control of your investments. In Nigeria and beyond, Sanu connects tradition with technology, transforming the way we think about gold and silver. Backed by rigorous audits and secure custody, your assets are always safe and accessible. Sanu, securing wealth and simplifying trade. In a world where the value of money is ever-changing, Sanu introduces a revolutionary way to secure your wealth. A digital platform for buying, holding, and trading gold and silver, anchored in cutting-edge technology. No more
I think that we will try and make up time, but also it is quite important that we keep the engagement going. So the moderators will keep the discussions neat and tidy and quick, but hopefully still covering all the essential points and questions that they intend to. So we're hoping to start this next session in the next 2 minutes. And there will be a brief presentation on the gold market structure, and that will be presented by Jude Ozunwane of the Africa Gold Council. And I'm sure some of you have been looking outside this room and you see the Africa Gold Council championing Africa's gold future and wondering, what is it? This sounds good. We like the sound of an Africa Gold Council, a Gold Council for Africa, and I think it's very pertinent that Jude kicks off this session. I think you are going to get a bit of a taste about what AGC is about, or more importantly, why Africa Gold Council. So without further ado, I'm going to call up Jude. Thank you.
Thank you very much, Nicole. Good afternoon, everyone, and thank you for being here. So without further ado, allow me to stand on the existing protocols that have been established, and so we can jump into the material. Next slide, please. So this is supposed to be a discussion regarding what is the gold ecosystem and the market in Africa. So I wanted to start by pointing out, essentially framing the question differently. If we keep the slide on, that would be great. Yeah, is what should be the structure of the gold ecosystem in Africa? So as you can see on the slide, there's a structure that comes from the World Gold Council. It's a stylized view of what the gold ecosystem should look like. Everything from mining to refining to storage at the LBMA sites and further set of activities. What the question I would really like to engage the audience on and think about going forward is this the structure that Africa wants? Does this structure actually work for the African market? So we don't have to replicate what has been done by the World Gold Council. We can learn from it, we can refine it, and we can design something that's fit for purpose in this environment. So to kind of spur that line of thinking, wanted to share some thoughts. Next slide, please. So one response to the question as to what should Africa's own gold ecosystem look like is to posit the idea that maybe we ought to have a different aspiration. And that potential aspiration that I want to kind of put out there for contemplation is we have an integrated continental free market for gold products and their precursor inputs, enabled by a robust, efficient, and competitively priced system for the supply of talent, logistics, metallurgic expertise, financial services, innovation, risk control, and commercial transaction systems, all in the service of the most discerning customers, whether Africans, non-Africans, et cetera, for a variety of purposes: industrial, monetary policy, retail, cultural use, etc. So the point being, like good strategists, we should be explicit in the choice we make. So always, I spent most of my professional life in strategy consulting, and what we always said to clients was the worst thing you could do is not choose and let the environment impose a choice on you. Because whether you make a choice or not, the environment will impose that choice on you. And if you get caught in that middle, in the consultant's favorite 2x2, you will be buffeted by a whole range of pressures. So if, as an industry, we describe our aspiration as building a continental free market for gold and its clusters, associated clusters, then that's a very different outcome than a lot of other gold markets around the world. It means we don't demonize small artisanal gold miners. Instead, we create an ecosystem to pull in their supplies into the refining infrastructure. African central banks now make different choices about how they treat gold. I know of, I think some folks in the room are privy to the difficult fights that have occurred in policy circles in Nigeria when it comes to legitimizing gold from here versus other sources, etc., etc. So the first step is be explicit as to the aspiration that Africa wants when it comes to gold. Next slide. The second, third, and fourth questions are in. We want both retail use, cultural use, use in monetary policy, defense. We want it to be regional. We want Ghanaian gold or Burkinabe gold to show up in Republic of Benin. We want to show up in South Africa. We want it to show up in Nigeria. And we also want it to be global. We want African gold to show up in India, in China, in the United States, across multiple markets, so that the various end uses that are desired, whether it's industrial uses of gold, whether it's cultural, whether it's monetary policy enabling, we want to be explicit in where we compete. Then the second related question is, how do you intend to win? Do we want to compete on the basis of quality? I think that's a given. So it's what's the purity of African gold versus the purity of other gold sources in the market. That's a fairly well-established basis. But then related to that is, what is the delivered cost at which you are arriving in the market? Gold will not always be at the prices it's at today. Today's prices are somewhat of a historic anomaly, reflecting the, essentially, to use a central banking language, the disanchoring of inflation expectations, which is a fancy way of saying basically people are terrified about the value of their currencies. So they move to something that they believe has intrinsic value and has been a reasonable store of value, historically speaking. So when those inflation expectations get re-anchored, as they inevitably will be, the price of gold will come back down to its long-term moving average. So if you are delivering gold at a price point that makes sense, when gold is publicly priced at $4,000 an ounce, what will you be able to do when gold is at $1,500, $2,000? So there has to be an explicit choice as to what is the competitive basis on which African gold mining will continue to occur over the next 10, 20 years. And that can only come from a cluster mindset where there's an understanding that everyone's behavior and their choice making actually matters. And at the same time, you're sharing some of the upside. So it cannot be simply demanding that your suppliers upstream or downstream take the cost hit and you take the profit upside. You've got to share both the pain and the pleasure. Then the final piece is around what is the basis, what are the requirements for actually supporting this industry? So what should governments be doing differently? What should private industry be doing differently? What should communities be doing differently? We've learned some very tough lessons from the world of mining, from oil and gas and agriculture, as to how do you balance the evolution of essentially a declining asset economy versus the needs of the various parties at the table. So there are a number of things that can be done. So one is the competitive infrastructure, the logistics networks, etc. What should DHL do differently? What can DHL do for the rest of the industry versus what it's doing today? There are other things around the efficiency of the technology platform. What do we look for when we're thinking about the supporting technology platform for the industry? The nature of the capital base, the productivity of the system, as well as the legal and regulatory framework. So one of the lessons we learned while the first time some of my colleagues here and I worked with Dr. Kyle Defayemi when he was the Minister of Mines in Nigeria during the Buhari administration, was that the problem wasn't necessarily our legal framework. We had some of the most competitive mining laws present in the world. We compared ourselves to Nevada, we compared ourselves to Chile, to Australia, to South Africa. We recommended some tweaks here and there. So, but the laws are an insufficient but necessary condition. What I'm urging the industry to think about is, what is the interaction across those 6 or 7 areas we've identified that would make for an attractive environment? It's absolutely critical to stress that not a single thing there will get you past the finish line. It's a combination of those factors that will enable the creation of a sustainable industry. So think cluster mindset. We're not trying to become the world's biggest at-scale gold mining industry. We may end up being there, but we have to, at the same time, maintain an idea that profitability matters, and that profitability should be shared across the industry. Next slide. So this is where the rubber meets the road. We can make those 4 critical choices, and let me review again. The first key choice is describing the aspiration you have for the industry. Second is figuring out where you want to compete. Third is how you intend to win, and keeping that eye on your cost structure and across the entire value chain. And fourth is all the pieces you assemble to enable those outcomes to happen. But at the end of the day, it's individuals like us in this room that will make those choices. So what we are advocating is that whether you are an enterprise, you are the chair of a host community trust group, you're a government group, you are an industry collaborative, etc., there are many parties at the table. There should not be decision-making by one party on behalf of others without their continuous collaboration. So in the famous words of MKO Abiola, do not shave anybody's head in their absence. We cannot emphasize that point enough, that there's a need for the industry to develop mechanisms for regularly talking to each other so we avoid the problems the oil and gas industry has experienced. That is a critical lesson that should not be repeated again in terms of the errors of our way. So as a result, our advocacy is focus on the first principles of transparency, respect for property rights, and adherence to the rule of law. It doesn't help us as Africans if a government shows up and tears up the prior contract without due process. Yes, it may be attractive. Yes, it may look like a good idea in that populist moment, whether it's a civilian government or a military administration, but ultimately it damages the long-term credibility of that institution. Second, let's make explicit choices about where we want to play. I cannot emphasize that point enough, is if you don't choose, the markets will choose for you, and you will then suffer the consequences of that choice. There's no better illustration of that than comparing the fate of Qatar, the state of Qatar, and Nigeria. 20 years ago, we were equal when it came to LNG. We basically made a lot of poor choices. Today, we are begging the Qataris to invest in Nigeria. And it's, I used to work for one of the world's largest LNG tanker carriers, and I remember when we did the deal on the Q-Flex vessels, each of those vessels cost $250 million about 15 years ago. And we paid for half, they paid for the other half. We ended up with about 4 vessels in our fleet. They had others. But the Qataris did a very clever thing, which was they went out and explicitly chose to find customers, find the logistics systems, and do it in partnership with the best providers in the world. There's nothing that stops us from figuring out who are the best gold miners in the world, who are the best refiners in the world, and engage in technology partnerships with them, sharing data, sharing control. But in the end, our goal, given our aspiration, to be how we make money by leveraging on things that already exist. We don't always have to reinvent the wheel, but we can be smart as to how we leverage existing capabilities. So that way, you don't have to end up with the strange things going on in Mali today. But at the same time, you almost want to blame the Barrick Gold guys for not being smart enough to invent a contracting structure that kept their local partners happy. So both sides made errors of judgment, and the Malians have compounded it by seizing those assets. And those things will end up in arbitration for years to come. But the rest of the continent can make a better set of choices. Next slide. So in conclusion, at the Africa Gold Council, what are we hoping to achieve? We're hoping to create a structure, and I think, as Nicole said, this is a new entity that has been formed in the last to talk to each other, contemplate the development of shared reserve assets. So as our currencies basically become backed by gold, given the volatility in the industry, to deliver an output that actually works for Africa, that avoids some of the errors of judgment the story, and then help guide the story, and then help guide the various participants into shaping the future of the industry. So on that note, I will stop my remarks and wish all of us an explicit choice-making session. Thank you very much. I think the facilitators may just have stepped out of the room, but if there are any burning questions or comments, happy to take them. Yes, ma'am. Faso, Nigeria, etc. will be incorporated in there. So one of the most exciting things that everybody in the industry is talking about is what Ghana has done with respect to artisanal gold miners and beginning to purchase from them and integrate effectively into its national reserves. We were very excited, I think, about a week and a half ago when Colombia did the same thing. So the Ghanaians are figuring out something that a lot of people have struggled with. And for us, one of the things we want to be able to do is to, in an objective way, tell that story, note the pros and the cons, and then recommend any additional refinements that go forward. Yep. No, thank you for that. Yes, sir.
Thank you very much for that beautiful. Thank you very much for that beautiful presentation that you made. When you're talking about Africa Gold Council, I mean, what comes to my mind is the associated organized crime that follows the gold. And I've not seen how you are going to address that within the context of your presentation, because security goes with gold. But whether you're transporting from Dubai airport to go to the refinery, you have your security tracking system, following you to make sure it gets to its destination, because sometimes you're carrying $500 million in one transit. So for cross-continental and interrelated issues, what mechanism are you going to work with African Union? Are you going to work with the sub-regional authorities to make sure that you, first of all, protect the environment so you can have something to build on? Thank you very much.
Thank you. It's a great question, and I'm tempted to answer you in an equally, hopefully, maybe interesting way. So if you're a student of history, it's alleged that at one point, when he was giving feedback as to the Pope's thinking about a certain issue, Joseph Stalin of the former Soviet Union asked the question, how many divisions does the Pope have? As a kind of trying to mock him as to the nature of his ability to defend his opinion. No, so having been also come from an industry where I've worn many hats in my life, and one of those was I worked in oil and gas shipping, and one of our competitors, the VLCC, which is the very large crude carrier, 2 million barrels of crude, was captured by Somali pirates off the coast of Somalia. And at that point, the advice that was given by the insurance companies, the flag states, as well as the port states, was don't fight back, don't argue, just let them take the ship, and they'll call you. And there was a very well-established mechanism, which everybody in the industry knew, but the outside world did not know. There was a guy in Dubai, you get a call from a guy in Dubai will call another guy, and they'll tell you where to deposit the money. Now, the vessel itself was what, at that time, a V was about 120 million, and the cargo it was carrying was roughly what, about $400 million. So you then, and it was a V that belonged to the old Saudi state carrier. So you had to make the decision and say, okay, I've got 22 guys on that ship. They're nice people. They have, they're most likely Filipino sailors. And what do I do? And by the way, the insurance coverage was written in such a way that actually for the Filipino sailors, they were better off to have died than to be injured. So if they were injured, the family didn't get any compensation. But if they died, they were paid. So very perverse set of incentives. So in the end, the Saudis said, well, look, the ship itself and the cargo is worth over $500 million. These guys simply want to collect $10 million in ransom, pay them. So when you think about that in the context of this discussion, yes, we'll work with the Mineral Development Center of the African Union. We'll work with mining states. Our job is to give advice. So I'm not going to go out and hire a bunch of former DSS, Battalion 32 guys, et cetera, and maintain a security force around Africa. We could do that. I mean, that's one possibility. And by the way, the shipping industry actually very actively considered it. Officially, it never happened. Unofficially, there were people who did hire mercenaries and put them on ships. And when people showed up that should not be there, they shot them. So you make your choice. And I know that we cannot impose choices on the rest of the industry, but we can say that as an industry, here's what we intend to do. There will be stuff that will be spoken publicly of, and there'll be stuff that would not be spoken publicly of. It's similar to the security problems we have in agriculture today in Nigeria. There are roughly about a third of Niger State is a no-go area. So you then ask yourself the question, what do you do in that situation to defend both your territorial integrity as well as the sanctity of private property and commerce? And quite frankly, if it means that we say to African governments, these are the security measures you ought to take to re-establish control over your territory and to protect your property rights, then you have to. So if you think of what's happening in parts of Zamfara today and Sokoto State, it's not some wild Fulani militia that's causing trouble and getting the Americans all excited about all sorts of things. These are people who are conducting security smoke screens to allow for mining without paying the federal government of Nigeria its due taxes. A lot of those are gold mining operations that are behind the veil of insecurity. So if you are NSA Ribadu, what do? Do you basically send a battalion of soldiers to, quote, pacify the area? Or do you come clean and admit what it is instead of all this vague talk about vandals and bandits and Turji Bello and how media savvy he is? These are simply people who are stealing property. Let's call it what it is. It's theft, and with crime built around it. So as Africans, we have to ask ourselves the question, is that the environment we want? And if it's not, then once again, I would strongly advocate we make the hard choices we have to make, no matter how bloody those choices appear to be. Otherwise, all this conversation is academic. Next question. If no more questions, I think we can segue into the panel. Yeah, thank you very much.
Thank you, Jude. Thanks so much. So we're moving into discussions 2A. I'm going to call up our panelists first. May I have Thor Exploration, Shagun here? Stonex, Tokam, and Kian Smith. Kian Smith. Okay. Franklin Edochi from AFC is unable to make it this afternoon, so we will hand over to Jude once again, and he will moderate this session.
So, no, this is fine. Yeah, this is fine. I can walk around. Yeah. Are you? Yes, we can. we can. Either that or, yeah, I can just join you guys in the middle. Yeah. Excellent. Thank you again for joining us for this panel. So go in order to make your life easier. Go in order to make your life easier.
Thank you. Good afternoon, everyone, ladies and gentlemen. It's a real pleasure to be here to contribute to this wonderful event. Just by way of background, my name is Shagun Lawson. I'm CEO of Thor. Thor is the 100% owner and operator of the Segilola gold mine in Osun State. It's Nigeria's first and largest commercial gold mine. And we've been producing gold. We're now in our 4th calendar year of gold production. So to answer your question, what obstacles have we come across? I think to fully answer this question, it's probably best to know a bit more of the background. You know, we didn't come into Nigeria as an operator or with gold mining experience. We came into Nigeria as a junior explorer. You know, we knew there was gold potential at this site where historical owners, right from the early 1900s, had seen gold, and it had passed through the hands of 5 different historical owners that have proven relatively commercial quantities of gold. So we came in with as an explorer, and we had to take this project through exploration, find something commercial, take it through a preliminary feasibility stage. After that, we went through optimizing our preliminary feasibility study and getting it to a bankable stage. And one of the most difficult things we had to do was actually try to finance this project. We required $120 million. This was in a country that had never had large-scale gold mining before, obviously with someone that didn't have a track record in large-scale gold mining either. But fortunately, we were able to raise that money. Largely, a lot of that came from the Africa Finance Corporation, who fortunately were headquartered in Nigeria. And, you know, given their mandates to develop projects like this, they didn't want to see a gold mine in Nigeria without their name on it. So that helped us a lot. And then we ended up going into construction in 2020. COVID came, and then it took about 15 months to build our mine, and we poured our first gold in late 2021. So we've been producing gold now for, this is our 4th calendar year. And we've seen challenges along the entire way. I mean, right from the beginning in exploration. When we were here exploring, looking at the gold landscape in Nigeria today is completely different. Even to go drilling, there was one company in the whole country that had a rig that was available to drill. Now you have numerous rigs, numerous companies competing for drilling contracts, so it's good to see that. Having the social license to operate, so getting your communities on board, that was always an educative process in the beginning. And a very good example would be even exploration. You know, you'd come into the middle of the bush in Oshun, you drill 24 hours a day, day shift, night shift, for months. You'd pull out core samples and you'd go away and come back. And the villagers would say, where's our share? And you tell them you haven't found gold. They don't believe you. They just think you're lying. They say, what are you doing there for 6 months drilling day and night and you haven't found gold? And then obviously going into financing, it took us a year from signing our financing documents to drawing down the first dollar with AFC. Samaila was here earlier, but if he was still here, I probably wouldn't have said that. But you know, he knows how hard that was. And then finally, you know, it's no secret we're a public company. Gold prices are at an all-time high. We've been very fortunate. We're in a low security threat area of the country, so we haven't had any major security issues. But we have had issues with at state level, for example. You know, mining is under federal law. It's supposed to be regulated at federal level. The state is supposed to get their derivation from federal level. But we have had issues where the state does feel shortchanged. And even though we have committed to our local communities, there's been a lot more pressure to deliver it into the state as well. So we have had issues. We've had to have intervention at federal level as well. So those are highlights of some of the issues.
Yes, thank you for that perspective. So let me turn it to Stone.
Panel, and yeah, we come from a company that it's a financial constitution that's been around for over 100 years, but we're not just on the gold front. The gold is a section of it, and it's a section where ultimately we're the 3rd largest physical mover of gold globally. So that comprises any day of around just over 4 tons of gold, which you have to keep reminding yourself the value of that is these days quite daunting. But it's around $500 million US of gold a day. But the group as a whole does over $5 billion of financial transactions a day as well. So to put that in Naira terms, that's 7.5. I think from a developed and a regulated perspective, Nigeria is relatively new in the process and has a long way to go, but that's a good thing in my books. And I think that's because we can step off on the right foot rather than try and retrofit what has potentially gone wrong and backtrack, which I think is quite difficult to uproot those establishments. So I think, you know, the conversations that are happening today is a prime example as to why this is such an exciting space to be in, not only in gold, but particularly on this country, Nigeria. We stand looking forward, and we are excited about the possibilities. Just to go into a little bit further about the opportunities we have, I think it was touched on earlier on this morning, just about how the drive should be African-centric, Pan-African, and I think that is ultimately, you know, that's my role. The more we can develop Africa, the better for StoneX. There's enormous opportunity here. There's enormous excitement. And I just wanted to, I didn't take umbrage to it, but I want to just touch on the point that, yes, maybe history has said that there's been a lot of, that resources have been taken advantage of by the rest of the world. And I think we just want to be careful not to move from one extreme to the other extreme. And I think where we at StoneX are trying to stand and represent is we find the sensible middle ground, and where we can leverage and benefit from all the collaborative conversations and things that we've learned, the outside world has learned, the World Gold Council has learned, the LBMA, the OECD have learned, and we apply it to the nuanced.
Drive that market evolution.
That's a very, that's an academic, very detailed question. But maybe first of all, I'll tell you a bit about myself and TOCAM. My name is Bumi Akiremi, and the firm I work for is called TOCAM. TOCAM is a project development and transaction advisory firm. Our main transaction that's recently closed, or the main transaction that we've recently closed, which most people may have heard about, was a fundraise for a company called FG Gold. FG Gold is the concessionaire of a mine in Balmahon in Sierra Leone. We've been on that transaction now for about 4 years, so it took, similar to what you heard from Shegun, it took about 4 years to raise the financing for Balmahon. Total monies that have been committed to that project are probably close to about $500–600 million. And when we get to first gold, or when FG Gold gets to first gold, sometime Q4 next year, it will be the, like I said, largest commercial mine in Sierra Leone, similar to what Shegun's done in Nigeria, and it will account for about 10% of that country's GDP. So that's my background is, I'm a finance person, so this man asking me complicated questions about, but what I will say is that I'm very impressed with the contributions that I have been privy to listen to from various participants here today. I think that there's been a quiet revolution going on, unbeknown to a number of my colleagues in the banking sector. So I have furiously been sending text messages to various people because he was mining limestone and producing cement. He was known because he was a trader, right? So how did that evolution from being a trader, basically like a price taker, how did that evolution from being a price taker, how did that journey from being a price taker to being a key market participant, shaping the market in those two spaces, how did that journey evolve? What lessons can we learn? I think those are the sort of things that I think we all need to maybe pay a bit of attention to. Similarly, if you're going to copy countries like other emerging countries like, well, China is no longer emerging, but think about what the Chinese have done with rare earths, right? Depending on who you listen to, most of the rare earths that are required for virtually everything these days, 90% of that stuff is processed by Chinese firms, right? So what exactly did they get right? I think those are some of the points that I would like us to maybe pay a bit more attention to.
No, thank you for that perspective. And I think one of the things I'm hoping to push you, StoneX and Thor, on is at the heart of this problem is capital. So who will take the type of years, etc.? What should we do different years, etc.? What should we do differently? If we yeah.
Now you're asking me questions that I, okay. So I think that And again, we're lucky in Nigeria because we have the experience of oil and gas to reference. So if you think about a typical oil and gas operator and how banks tend to, and when I talk about banks now, I'm talking about specifically local banks. So when you think about how a typical oil and gas banker in Nigeria will assess an oil and gas upstream operator's risk, right? The first thing they want to know is the resource there, okay? Segun's talked about being a junior explorer, right? When the resource is there, you're not still exploring, right? You've already gone past the exploration stage, you're now in development, right? So it's significantly already de-risked by that stage, right?
And just to be clear for the audience, you often talk about reserve levels in oil and gas.
Yes.
So then the question becomes, who should bear the cost of building that initial data set?
Well, it should be the sponsor, right? So, I don't know whether Samaila was here, as was Franklin. If you reference FG Gold, and I think similar with what Segun's done, the people who appear to be happy to sit down with sponsors at that early stage or earlier stage before you crowd in other sources of finance tend to be the boys in AFC, to be honest, and then the other banks tend to come in subsequently. But the guys in AFC will, in my experience, they will cut you checks for to enable you even pay for your DFS, right? I'm not sure a local bank will pay for a DFS, but there is a project development team in AFC that will pay for a DFS. Once you've got a DFS, it means that there's resource there, it's a bit more bankable, and then it's a much easier sell. So with FG, for instance, the last bit of financing that we've just closed was for about $330 million. Half of that came from Africa, and the rest came from outside of Africa. But the money that came from outside of Africa wouldn't have come if the African money wasn't in there. So I think we now have a playbook. So the fact that we've got a playbook means that things hopefully will be much easier going forward.
Look, I think to add to that, there's certainly actually before I went to AFC, we had put in. There's nowhere I didn't go. See, before I went to AFC, we had put in. There's nowhere I didn't go globally to raise money. We had invested over $12 million to get to that stage that needs to be filled.
And for StoneX, would love your perspective on this, but also I want to challenge you, say, given your kind of bird's eye view of where the flows are in the system, would you be comfortable taking further upstream risk?
It's something we're certainly looking into. We have a debt capital markets team based out of New York, and I must admit we've been in conversations with FG before, and it didn't get to where we wanted it to get to, and that's through our own fault.
Hang on, if I help you get to where you want to get to, do I collect an investment banking fee? 3% is okay.
But yes, it's not traditionally where we've been. It's not a space we've been traditionally. It's something we're starting out into. We're getting a lot of attention and a lot of interest from our pools of investors wanting to get exposure. I'm only sorry that I think your opportunity came too close to the beginning of our the further down the services route, the refining, the logistics. It's a very fine margin business, and so the banks will be looking towards the mining side. There's so much opportunity, and the fact that it's really starting to grow from an African perspective, from African investors. That's what's so exciting. That legacy mining industry is quickly changing, and I think that's why, as I said before, it's such a fun, exciting, great space to be involved in, and it's an industry with a tailwind. You know, every time I go to these conferences and we bounce around the place in Africa, there's so much excitement because we're in this industry, and that's directly relating to not just what's under the ground, but the effects it can have, the knock-on effects. The way you can see it's changing governments right now. Governments are taking a real look at this and going, okay, we need to take this seriously. We don't need to spend our reserves and lose on our trade deficits. We can actually spend local currency on local resources, shoring up our reserves to give us a fighting chance against everyone else. And for that reason, this is just an infectious conversation.
And that raises an interesting question, which is that transition period between where we are now and where we want to be when it comes to the capital to grow the system. Should that come from government, or should it be done in a hybrid way, such that by building a network of suppliers, as you referred to before, saying you didn't have many drilling companies at the beginning, if essentially what I'm getting at is, can your own efforts to help build that network of suppliers and the supporting and related businesses, could that create the political currency where governments can then turn and say, hey, look, these guys actually help driving job creation. We ought to collateralize some of our own future revenues and use that to fund the further development of the industry. Would that be something that, you know, we can see a way to get to?
Do you want to go first, or shall I?
Yeah, look, I think certainly a success story always attracts additional success, always attracts additional interest. There's no way you can build a mine of any metal and not have the support services, demand for the support services. Even for us, from spare parts to reagents, we used to, on day one, we used to pretty much import well over 90% of the things we used, and now that's dropped dramatically. So I think the more success stories there are, the more the industry is going to grow. I've been talking to Nera for years about a refinery. From a personal perspective, we spend about $2 million a year just transporting our gold to refineries, not even refining. And having a refinery just here in Ikeja is a game changer, you know, for us. And you know, the more mines that come, the more services like that you're going to see coming up. And for me, is she in the room? I'm overjoyed to see her see this happen, and hopefully we can support her in this by allocating her a significant portion of our gold, and hopefully more services like that continue to emerge.
Yeah, so yes, I think change comes from the top, but it doesn't necessarily have to start there. It's galvanized by the private sector, really just showing from the front, leading from the front with a torch. I think these gentlemen are prime examples of that, much more than I can say I am. But yes, I think just looking at some examples where we, as StoneX, have been involved, we've worked with the Bank of Ghana, we've worked, and we are working with the Bank of Ghana, we are working with the Bank of Tanzania, we're working with the Bank of Zambia, with Ivory Coast, and Malawi, and many more African countries, but specifically with the government, with central banks, to coordinate how they can start to benefit from their natural resources. For example, Bank of Tanzania is doing good gold flow now out of Tanzania from their own refinery. So from GGR refinery, who StoneX has worked in partnership with, and they're having their gold from Tanzania refined in an LBMA refinery and kept as good delivery bars against which they can borrow and use as collateral. So it's a really good story that is then being looked at by other governments, by other central banks, and saying, okay, this is interesting. We have this resource. We don't need to import this resource. This resource can actually be used to take us places. And that's the conversation that's really, I think everyone in this room has probably heard that story before, and it's gathering pace, and it's something that should certainly be happening in Nigeria as well. I think also not just looking at it from a large scale and an LSM perspective, from an ASM, which we've touched on today already, but it's historically a very difficult industry to talk about, and that's not through the fault entirely of ASM. It's going back to the banking conversation. They've been left in the cold. There are many ASM producers, millions out there, who would love to sell potentially their gold through legitimate routes, but sadly they may be forced to go through the more nefarious, be paid discounted prices for their gold, and so they've kind of been marginalized. And we all know the story where the systems haven't helped because they've provided exceptionally difficult regulations in which ASM gold could enter the system. This is now progressing, and it's through constant improved development. And so you're bringing in 40% of Africa's gold production is ASM, of which 80% is not, it's not counted for. It disappears. And we don't even want to put that in.
Innovating, and you recognize that the way to develop a community is by making sure that the money is circulating within the same jurisdiction. That's how you pull people up, and that's how you pull people up sustainably. So the more that we can encourage people to take risk, to innovate, and then to just make sure that all the services that they require are in-sourced or sourced within the borders. All the things that need to be done to add value to the raw material, again, is done within the borders. That's basically, for me, that's how you lift people out of poverty, and that's what we're all trying to do.
Great, thank you. I know we're, Nico, how are we doing on time? Good. We can move on. So maybe just before we wrap it up, let's give the audience a chance to also direct questions at the group. I know one question that is been kind of popping out there, let's just name it, is the role of host communities and how we
was with you to demonstrate.
I'm a pseudo banker.
Yeah, no, not that type. To demonstrate the level of ignorance in the banking sector regarding what is going on. I think this is one of those points where the best thing you can do is just to truly understand how completely disconnected our sector is, and therefore maybe we can start. But I was going to contribute to your point around the host community. I think it's already been proven what works in host communities. It doesn't matter if it is crude oil, it doesn't matter if it is tin mining in Jaws or gold. It's exactly the same thing. First and foremost, participation is important. They have to feel like they have a skin in the game in the process, not just the output, because then it hurts them as much when there's disruption. The second that is more obvious is that is equity. They've got to have a skin in the game as a collective, not individual players or in the community who then, keep it for themselves. But I think the biggest part is whenever you extract this sort of assets from people's land, it does leave some level of degradation in some form. And you're taking assets that cannot be replaced. The only way you can replace it is make sure that part of the resources is used to create connection to a different pool of value. And that could be, for instance, getting people educated, or it could be, for instance, bringing in the infrastructure to market for something completely different, but at least it exposes that community to opportunities. So I don't know that we need to rewrite that rule book, but for Nigeria, it might be wise for us to speak to the people in the oil and gas industry and see what really worked. And kind of just take that and then start to adapt it over a period of time. But you're right, probably that should be the beginning of the conversation. The nature of natural resources.
Thank you very much. My name is Lola Diososami. I'm a legal practitioner, partner with Udo Doma Belosage. It's interesting that you mentioned host communities, and the previous speaker mentioned what the experience has been in the oil and gas sector. From experience, we find that it's a bit different with mining because of the legal framework that we have in place. So you have the Mining Act that says that you need to obtain the consent of the landowners. That sounds simple, but in real terms, it becomes really difficult when you have 6 families coming forward to claim ownership of land. Who do you get your consent from? You get your consent from the respected leaders who have given you the certainty that, yes, these are the real landowners. Then you're halfway through exploration, and then you start having community issues. We haven't even reached any. We need to start from reworking the legal framework. And that's a conversation that needs to be had at a higher level. So I really just hope that here we have somebody who has the ears of government that, I know there are reforms going on with regard to the mining laws and everything, but these are issues, critical issues that we need to address to be able to unlock the value there. Thank you.
I think there's one more hand up in the audience. We can let our panel comment on this as well if they're on this question.
I will just add to what Lolade said. Hi, Lolade. The host community issues are extremely complex, we found. In fact, if we were to start today to try and build a mine with the industry where it is today, I think it would take a lot longer than it did when we did. We have legal owners of the land, you have ancestral owners, you have the federal government owning the minerals, you have the state government owning the land, you have farmers owning the crops and pay rent to the landowners. So it's a very complex situation. And then for most mines, certainly at a mid to large scale, you're not looking at just the footprint of the mine, you're looking at the footprint of the plant, you're looking at the footprint of the waste material. We had, I have my country manager here, Austin, we had 438 landowners we had to individually sign with. And that was separate from all the community commitments we had to make. So there's certainly a requirement for the ear of the federal government at the very top level to see how this can be made less complex. And it's not just as simple as having the state government compulsorily acquiring the land. There has to be a real review of this area.
I don't think I've got much more to add to that, yeah.
Any other questions or observations? I think maybe one comment back to my banker friend. So many moons ago, I was working for the central bank when we were trying to kickstart the focus on agriculture, and I helped design and led something called NICEL PLC. Oddly enough, I spent about 50% of my time explaining to bankers what agriculture was, which seems bizarre. But then I realized that a whole generation of bankers had grown up in Nigeria with next to zero understanding of agriculture. And so in the absence of that understanding, it was difficult for them to appropriately price the risks associated. So I used to start my meetings after a while with a joke and say, so tell me, if somebody walks into your bank and tell you, oh, I lost the loan because black pod disease destroyed my corn, what would you say? And there was, stunned silence, and some people nodded and said, yeah, I would accept it. I said, the joke is on you, because black pod disease is a cocoa disease, not a corn disease. So that tells me immediately that you have no idea what you're doing. But, rather than beat them up, we built a whole bunch of literature to help educate folks. And very quickly, what I always used to tell my team is that our job was to essentially put ourselves out of business. So in the initial stages, we could very gladly charge them 1.5% of the value of the loan as the credit risk guarantee. We're basically selling credit insurance. But as their knowledge base grew, the need for those guarantees began to disappear. And so today, I don't envy my successors at NICEL because they have a much more tougher job. The banks don't need them anymore. So, and I think that's what has to happen in mining as well, is knowledge has to grow. I'm in agreement with you that the legal framework also has to evolve. So when we when Dr. Fayemi was the Minister of Mines, the irony of it was his colleagues as state governors were now coming to him to say, I want the rights to the mining assets. And it's like, sorry, read the Constitution. It belongs to the federal government. So if you want to change that, call up your state reps, go to the National Assembly and amend the Constitution. But in the process of doing that, exactly, you have to get to this consent issue because the language is, it's almost flip in the way consent is defined. It's you have to get the consent of the community. And then when you get to the field, you realize there are infinite layers of what constitutes community. So yes, there has to be some refinements to the legal framework to essentially to solve the consent issue is make everybody a shareholder. So as you become a supplier in that system, with part of your contract, if you've proven yourself well, 12 months into your supply engagement with us, we give you 0.0005% of the equity as a reward. So our futures are tied together. But I think our advocacy would be, let's be as creative as we need to be because we do have some unique problems we want to solve. So last comments, final round comment? If not, I will. Yes, you get the last word, sir.
My comment is that we have to actually go back to the oil industry and see what they have done right and what they have not done right. And one of the key issues for the faster development of the gold ecosystem is to develop an academy for gold, both mining, refining, and then marketing. So which means that the economics of gold will be taken from the beginning right to the end. But my question is the African Gold Council, or is it the companies like Segilola Gold that should actually be responsible for that gold economy? You remember that if you look back to the oil industry, what actually happened was that they had to establish through the National Local Content Commission.
And I'll let the industry also respond is, there are certain things that we don't need to formalize. So there are mining departments across universities in the country. We can certainly help articulate some of those lessons in partnership with those mining departments and then call upon industry to work with them to fund greater training and exposure. But I want to be careful of instituting permanent costs because, again, I go back to my background is there's a term economists like to use called Ausonian coalitions, is that the moment you create an institutional mechanism and you make it permanent and there's cost and benefits associated with it, it will always figure out a way to preserve its own existence and keep reinventing itself. So if I can avoid putting those costs into the system, absolutely, that should be our mindset. But we can certainly collaborate and say, here's what needs to happen in order to create that capacity. There are mining universities and programs all across Africa that we can leverage and partner with in order to build that capacity. I don't know what the industry...
Right, and I think there's no point in reinventing the wheel. I think for me, what as Africans, or if we're thinking with an African mindset on, I think that the important thing is what lessons can we learn from our past? What exactly are the objectives? What are we trying to do differently? Who can we learn lessons from, right? And then just copy as well as you can.
Yeah, look, I completely agree. We try and do as much as we can. We partner with universities across Nigeria. We take on people from Youth Corps. We have a policy whereby our expats have to train Nigerians with the view that the jobs are going to be handed over to Nigerians. We give scholarships. And I think one of the most important things we do, we look globally where we can upskill people. I'll give you an example. We have, statistically, female truck drivers are a lot safer than male. And, and that's something the Australian mining companies took on, you know. And so what we have done, if you come to our Segilola, you'd see we have female truck drivers that even started off as cleaners, who we've upskilled, and now, and that statistic is proving to be correct, who are now probably our safest truck drivers on site. So we continue to, we continue to try and do these things where we can. I do think there's a huge opportunity here in Nigeria. We've taken a long-term view. We hope, you know, in the next few years, if I'm speaking here, Segilola is not the only large-scale gold mine here, and there are other companies that have invested and discovered sizable gold deposits.
I'm afraid, Dr. Goodwill, I won't be able to give any direct comments to your question. I think the gentlemen here have given a nice summary. Thank you.
Excellent. Thank you very much. You've been an amazing audience, and yeah, we'll wrap it up here. And I'd like to thank the panel for great work. Thank you very much. Thank you, John.
We'll move into the next discussion. We're just going to make some shifts on the stage. This is the second part of this session, the gold market ecosystem. We'll have 4 panelists on the stage, 1 coming in by Zoom. We're supposed to have about 20 minutes for this discussion, but because we are trying to make time and we've still got quite a bit still to go, we want to jump from this session into the next, then we'll take a break, and then we'll come back to the last session around gold for Africa in a digital world. So if I can just let the moderators be cognizant of that. The next session, the next discussion is supposed to be 20 minutes, but I'm going to say 15 minutes, because it gives you then a 5-minute leeway to end exactly after 20 minutes. Right, I'm going to call up our moderator for the session, who will then call up panelists. I would like to introduce Mr. Mkhululi Mhube, AMDC Program Officer. Thank you.
Thank you, Madam Moderator. I will try to meet my 15-minute quota. I'll call straight to the stage the Ministry of Mines in Liberia. Right. We'll call on KPMG. We'll call on Core International. Cool. We'll call on the Ministry of Energy in Gambia. And then we'll call on the Bank of Industry. Bank of Industry is the one online, is it? Ah, sorry, I couldn't see you there. Right, 15 minutes. The clock starts now. I'm the Programs Officer at the African Minerals Development Center. For those who do not know what that is the specialized agency of the African Union that is meant to coordinate and implement the Africa Mining Vision. That's a story we can have after this meeting. I'll go straight to my panelists, but I will start with my 2 government representatives, who by African Union standards are my bosses. So I have to ensure that my bosses are happy. And the first question will go to Liberia. I'm also in charge of the artisanal and small-scale mining portfolio at the African Minerals Development Center. So my questions will lean towards artisanal and small-scale gold mining. To Liberia, the mining landscape in terms of artisanal and small-scale gold mining, the challenges and opportunities we have within Liberia, do we think the Central Bank of Liberia or any other financial institution in Liberia is willing to be an off-taker of artisanal and small-scale gold mining after the challenges have been dealt with from a ministry standpoint? Please.
Thank you very much. So the ESM sector in Liberia is the only sector that is designated for Liberians only. It is the only source of rough diamond. All of the raw diamond we export out of Liberia comes from the artisanal and small scale. And we have more than 600,000 people involved, directly and indirectly. It is not only a source of revenue for government, but it's also a source of livelihood and employment for our local people. But yet, this sector remains informal and unregulated. You have environmental issues, biodiversity loss, water pollution, and all that associated with it. But yet, there is a positive side to it. We think formalization is the best way to go. So for us, the plan is to formalize the AXM sector, but to do that, we need to decentralize the activities of the ministry, because currently we are just centralized at the main office, and we think establishing offices in the 15 counties will solve that problem. And we've already recruited and trained 15 mining engineers and geologists for that. And hopefully next year we'll have the decentralized program rolled out, and then we can begin the formalization process. Now, yes, the central bank can be an off-taker for certain. And in fact, we've had numerous conversations with the central bank now. They sent a team to Ghana, to Dubai to understudy the processes there. They've even asked for ASM hotspots in the country. So maybe next week they will be sending a team to the ASM hotspots to understand how the ASM operates. So yes, central bank would be an off-taker. Thank you.
All right. Thank you, my boss from Liberia. Same question goes to my boss from the Gambia. Do we think the central bank would be willing to be a player in facilitating offtake from artisanal and small-scale gold miners? But that would be after we've handled the issues and challenges, which I hope you can articulate for us within Gambia.
Thank you very much, and good evening to all. I'm Mr. Jao, the Director of the Geological Department of the Gambia, which is also responsible for the management of the resources as the mining department. I'll be speaking from a different angle. The Gambia is not traditionally a major mining country, particularly gold. Geologically, we are far from the greenstone belt that is host of most of this gold in West Africa. There have been occurrence of alluvial golds, and currently some junior companies have started exploring the possibility of hitting gold. But as a country, we've also come up with policies and regulation, and so that these resources, whether they're there or not, are traded in a legal way. We've developed regulations and come up with policies that will guide the trading of gold. Gambia is a transit point for most of these gold traders. Gold coming from other regional countries to the Gambia and then fly out to Asia or Western Europe. And the government, acting proactively, decided to regulate the sector, to come up with regulation that will manage or control the flow of gold through the Gambia. As I said, we are not a mining country, but a lot of sometimes goals and all the other relevant stakeholders that whoever is involved. But seeing what is happening within the region, our intention is to start involving them also into the within the group, so that they will also become an off-take taker of gold product within that goes through the Gambia, because as we said, there is very little gold reserve in West Africa compared to other countries or the West. And we have to take opportunity of these low-hanging fruits. And these low-hanging fruits are not there permanently. If you don't take the chance now, there will come a time we cannot utilize them. So what Nigeria is doing, I think, should be shared with other countries so that all of us can take opportunity now, rather than when the opportunities are no more available.
Thank you, my boss. Economic development, trade, tourism, industry, and minerals. That's the portfolio of the commissioner who is in charge of the African Minerals Development Center. And Gambia is a perfect example of how you can implement the Africa mining vision without being a mining country. People have the tendency of forgetting that the Africa mining vision is not about mining. It's about minerals development and henceforth socio-economic transformation without necessarily being a mining entity. So with Gambia, and those who know Gambia's geographical position, it is interesting that they're a transit point, right? And yet, if you look at their geological positioning, you realize they should not be a transit point. But because they are, they can actually take advantage of the AMV tenets and actually become a socially, economically developed entity from minerals development. So thank you very much. This is Gambia. The Gambia. Apparently you don't just call it Gambia. It's the Gambia. Am I right, sir? Yes. I learned that the hard way. I nearly got fired for just calling it Gambia. The Bank of Industry. Madam, can you hear me? Yes, excellent. In partnership with the
Industry, Nigeria foremost developmental finance institution. And like you rightly said, the fund, we manage it for the government. It's not as if it's a BOI fund, no. We manage the fund for government in the last 8 years. And I'm not going to bore you with stories of how it started and things like that. Yeah, back then, 8 years ago, there were a lot of issues with the sector. The sector wasn't as developed as it is right now. So that's affected the funds as couldn't support. But I mean, I think AFC was able to support along the line, and I'm really happy that it's still doing strong today. Shout out to you, Shegun. So back to your questions, yeah, there were a lot of challenges. I mean, everybody has talked about the issues of data. Most of the artisanal miners, nobody has documentation, and they are not ready to do any documentation. Even the formalization, government was saying, yeah, we need to formalize them, but they were not ready to be, launch of today. So that shows that there's positive improvements and there's opportunities to elevate. So part of the success for the industry, for the sector, was increased formalization, because I know government has done so much. Thousands of miners have been registered into cooperatives, and with that comes visibility as well as access to government programs, and even the local banks, the commercial banks. When you are formalized, it's easy for them to actually come in and support. Also, there's been a lot of growth in the gold value chain. Someone was talking in the morning about the presidential gold mining initiative, what they're doing. So that's part of the positive that's happened to the sector over the last 8 years. And aside that too, the sector, there's more access to financing. Really, now we now have a fit for purpose if I may call it that, fit for purpose financing. You know, back then it was more of collateral-based kind of lending, and that didn't work. But right now it's more fit for purpose. Sit down, now that you're formalized, is it kind of cooperative lending you want to do, or cash flow lending? So with that, that comes, I mean, that's a positive to the sector. And I don't know if I should go into the key lessons that we've learned going forward, or I should stop at this point in time due to time constraint.
Thank you for helping me there on the time constraint. We would have loved to hear those, but you did mention the issue of financing. So in the meantime, the African Union, thanks to the portfolio I'm leading, is going through setting up a continental strategy on artisanal and small-scale mining based on what we call the golden support triangle that focuses on extension services from the state, marketing and quality, that is both state and private sector, and then finance and credit. This is where the challenge that we need to deal with our financiers who finance sand mining instead of gold mining and not knowing the difference. But in due course, that is something that I am hoping will actually come out by mid-year next year. And thanks to the African Gold Council, we'll actually be moving from having an artisanal and small-scale mining sector on the continent, and 20 years from now, we'll only have a small-scale mining sector. Right, Core International. We've been focused on helping governments and private sector client partnerships to succeed, right, through natural resource and funding natural resource projects and funding natural resource projects on the continent. Can we share how, briefly though, your success has come about, and what opportunity matches do you see that can strengthen the critical supply of that value chain on the continent?
Yeah, thank you for the question. Yeah, I'm Archibald Troco, and I'm head of strategy and platform development at Core International. Now, what we do, we are a consultancy, but we kind of sit in this place where we do research, development, and then delivery. So the idea is we help all of our clients, both from in the private sector and the public sector, understand first what you have. That's the first step. Then it's a case of understanding what the market wants, what it needs, packaging it right, then delivering it, promoting it, taking it to market. So I think there's been so many different types of conversations and different ideas over the best part of for most of the day that really touch upon some of the key things that need to be done. I think the central bank as an off-taker, guaranteed off-taker, is one of the big ones. But I also think we really need to think about just learning from each other. We do not have to reinvent the wheel. Listening to Shagun Lawson talking about how many people had to be consulted when it comes to that. Let's take those learnings, we can apply them in different areas. Our idea is to essentially create USB. So everybody here has a smartphone, right? You have computers. Everyone knows what USB is. That was 7 companies in the 90s that developed that standard, so then that everybody now can plug and play. So with our data, with everything that we do, with our DFIs, with our financiers, we already know that they need certain information to be able to invest in a project. So we try and get to as close to de-risking, well, as much de-risking as we can, and get it as close to as bankability as possible, so that by the time we bring it to them, they're like, yep, rubber stamp, we're good to go. So that's what we try and say, let's learn from each other, learn from who's done it best. We think some of the guys here at the Gold Council, Key and Smith, what they're doing is phenomenal work, and we're really proud to support them as much as we can. So I think that's one of the key opportunities, is learning from each other, formalizing, having guaranteed off-takers, and having the financiers coming to help that project, and we'll do the matching for you.
Thank you. Knowledge management, knowledge sharing, peer learning is more or less what we are feeling is necessary for our scenario to get forward within the next few years. Finally, KPMG, one of the big 4. Are you still one of the big 4?
The only one.
Right. So, KPMG, with a unique vantage point in business advisory across the continent. Oh, is everything okay? That's my other boss. Huh? You do not want to. With the vantage point in business advisory services across the continent for private and public sector participants, especially in gold mining and financial sectors. Considering what the AFCFTA is doing and has done, what do we believe are the structural policy considerations in artisanal and small-scale gold mining that could support national economic benefits, especially for the adoption and sustainability of practices on the continent with relating to ASM?
Okay, so I think many of the comments that have been made today align with the fact that there is an urgent need to formalize the artisanal mining space, right? Maybe to backtrack a bit, when the reference to artisanal miners really it's licensed miners, because usually when you use that term, there's a lot of unlicensed miners that fall into that into the space, especially when you look at gold in Nigeria, right? There's a large community of unlicensed miners that are carrying on activities supported by a number of factors. So if we're talking about licensed miners, it's going to be important that government helps to formalize this set of mining companies or mining entities as the Continental Free Trade Agreement begins to play out fully. You then have the opportunity for minerals to go across borders with little or no restrictions. You have opportunities like we've seen with Kian Smith here, where you have the opportunity to refine gold coming from or to test, refine, and help to stamp gold coming from across the region. So helping to formalize and put in regulation that would actually track what is being mined and how the minerals are going across border would also help. One approach that can be used is that of a carrot and stick. So using finance as a strategy to attract them to formalize, and then also putting in punitive measures for small-scale miners that do not adhere to policies and regulations of government around reporting what has been produced. There has to be incentives around duties and customs, which, looking at the tariff lines you have under the Continental Free Trade Agreement, gold has to be included, or minerals generally, should be included amongst the list of those that will enjoy from preferential rates, so as to encourage trading across the borders.
I'll put you on the spot there and say I hope you work with AMDC to actually craft a potential protocol on those minerals, or rather a minerals line within the AFCFTA trading protocol. Is that something you can take on?
Sure, for a fee though. I'll do anything for a fee.
I'm trying to avoid the fee. That's why I'm trying.
I start from the fee. I always start from the fee.
Okay, there's a reason you're one of the big four. No problem. We are 5 minutes beyond our time. We would have taken questions, but for the purposes of ensuring that we get to finish this on time, let us clap hands for my bosses and the participants. And hopefully we can continue on a bilateral at the breaks. But right now we're going straight into our next session. Thank you.
Thank you very much. Before we do go straight into our next session, I would like to call on the Ambassador of Belgium just for a few goodwill messages. Thank you, Ambassador.
Excellencies, ladies and gentlemen, it was truly an honor for me and a pleasure to be part of the program today and to listen intently and look around. Everything I've seen has brought two thoughts to the front of my mind. One brought me back about 10, 12 years when I was as a diplomat serving in Kenya. And we were just past the big shock of the financial crisis that, of course, had affected big parts of the world. And we met a Belgian businessman there. He was very adamant that at the time in Italy, and I mention Italy, it's a bit of coincidence because I also understand instrumental in a number of things we heard about today here, but it's a coincidence. So we heard from this Belgian businessman that in Italy, a very prominent Florentine patrician families were at that time smelting down some of their age-old, centuries-old gold artifacts and selling, while at the same time in China people were buying gold. And his theory was that also the shifting of gold from west to east was also was a very good proxy indicator of wealth shifting from west to east. Now, of course, it for self-reliance and sovereignty. So I think that's a very important idea, and so many of the things that were discussed today, including on the refining and on the work of central banks, harks back to that very notion. And we're very happy to keep being part of that conversation. A second thought is what we heard from the representative from the Central Bank of Nigeria on how this effort to build up bigger reserves and gold holdings should also translate into formalization, notably of the artisanal and small-scale gold mining. And as a diplomat, also in previous stations, including in Geneva, I've worked often on files that related to environment and small-scale mining, notably the problem with, for instance, mercury pollution locally, but then also how it affects the world at large, and how also formalization of this artisanal and small-scale mining could help to protect the health, the environment of the miners, so that there are actually very, very many positive offspring effects involved with that formalization. And we say that perhaps as global citizens because out of concern for health and environment globally. But I also say this as an ambassador of the only country that is an observer to the NATI board in Nigeria, and part of our bigger effort when it comes to transparency in extractive industries. Now, this is, I think, a win-win proposition, because formalization is also about making markets on other continents more savvy and interested in your product. Because 10, 15 years back already in our countries in Europe, you would find consumers that go for the niche of the sustainably sourced gold, of the environmentally soundly resourced gold. And so if you really want to secure access to these markets, then that formalization can help, of course, reach that standard. So this is also how, if we really are serious about enhancing transcontinental trade, about mutual investments, how this formalization and bringing more of this transparency basically helps everyone, both the consumer who asks it and the producer that gets the benefit of it. So thank you very much for having me here and for having been able to also update me on the latest in all of these fields today. Thank you very much.
Thank you, Ambassador. And I'd like to call up the Ambassador of Rwanda to Nigeria, also for some goodwill messages, please.
Good evening, everyone. Let me first take this opportunity to thank the organizers for having thought about Rwanda to be involved in this very, very important process. I wish also to use the same opportunity to invite you all to feel welcome to Rwanda. You are most welcome. And here I wish to highlight that as Africans, as Nigerians, you don't need any visa to come to Rwanda. And this is also extended to people in the Francophonie and others in the Commonwealth. You are all welcome. This, I emphasize it because you cannot do is the easiest. This you can do in less than 6 hours, and then you can proceed and do your businesses. The other thing which I wanted to highlight in this meeting is that we are strategizing, and we have started actually a couple of time ago, to move as a hub in many areas. Rwanda is for your money safe, and you can do business as you wish, and incentives are also there when it comes to investment, and the issue of funds repatriation is not an issue because it is open. And this area of financial sector goes together, of course, with many others, but we ensure that when it comes to any dispute to be settled, it is also possible to do it in Rwanda with the Kigali International Arbitration Center. You don't need to go in US, you don't need to go to Paris, you don't need to go to UK, coming from here to settle your dispute while you are investing in the same country or in the same region. So the Kigali International Arbitration Center has been actually working together with the Lagos one to ensure that we learn as a pair and we move in the right direction. But it is using also international skills and also international regulations, because we have also in mind that when it comes to skills, they are there in the world. The important thing is to pay for them, to choose the right one, and to be open to work wherever people can. We are thinking also, not thinking, we have, I am thinking to talk about governance. Whatever you do, you cannot succeed if the element of governance is absent in a sustainable way. And then in Rwanda, we have emphasized the element of good governance to ensure that wherever you are doing in the area of economic governance, we are doing the right thing, and it is the reason why when it comes to ranking by the World Bank, for instance, in doing business, we are actually at this level of being the second or the third. And when it comes to education, we have done the same. In health, we are moving that direction. And here, I cannot shy to say that when it comes to minerals, here, whenever you are exporting raw material, you are also exporting jobs, and then you are creating poverty in your own country. So here, the element of value addition is very key, and we think everyone actually should be thinking about that. And we believe in complementarity, working together, partnership. And when I am here today, I cannot also go without saying, Kian Smith is welcome to partner with Rwanda. We have started discussions, and we think complementarity in this gold business is also an element which can be helpful both sides. Because normally, when we talk about partnership, it can only be sustainable if it is seen in a win-win approach. And we strongly emphasize on this kind of South-South cooperation because we think it is nearer, and it is same culture, traditions, and it helps also moving forward when it comes to creating jobs in our own region. So I wish really to take this opportunity before closing, be available for everyone, and even me can just enter in the business and be considered as a gold trader, even when I don't know where to mine gold. It is something which can be actually useful and help our togetherness and the socio-economic development. And I wish to conclude by saying, once again, thank you. What you are doing is good. Keep on that direction and ensure actually we complement each other in a win-win approach. Thank you very much.
Thank you so much, Ambassador. And I'd like to just call on the High Commissioner from Zimbabwe for his goodwill message.
Thank you, Nicole. Good day to you all, colleagues, Your Excellencies. My name is Twanderai Oscar Mtuke. Actually, point of correction. I am not the High Commissioner of Zimbabwe to Nigeria. I'm actually the Deputy Ambassador of Zimbabwe to Nigeria. Allow me to thank you, colleagues, for hosting this. Personally, I found it very beneficial. There are a lot of things that I was unaware of. I was just having a conversation with Nere not so long ago to say, as I was seated there the whole day, recurring theme I kept hearing in these discussions was investing in gold. Investing in gold, investing in gold. And I was thinking to myself, what exactly is investing in gold? Because some of us, we assume if you own a piece of gold jewelry, that is what constitutes your investment in gold at a very lay and basic level. But it was quite useful. I had an opportunity to have interactions with Mr. Goodwill over lunch, who was educating me on the differences between jewelry and gold bars and gold bullion and the like. So I was very grateful to be here. We also have colleagues from Zimbabwe who are here. Very grateful to meet them. I had a colleague from Zimbabwe earlier who was also a beneficiary of some level of expertise in the level of gold processing. It's different from how we do it in Zimbabwe, how it is done here in Nigeria. And come to find out that the way it is processed here in Nigeria is very energy efficient. Hopefully these are lessons that we can take back home and learn from, and also better our own gold production and gold refinery processes. Earlier in the morning, we had an occasion to visit the refinery to witness what KM Smith is also doing here in Nigeria. We see the efforts they are making and how they intend to expand on their gold production, gold refinery here. So we wish them all the best. Thank you so much for having me here, and all the best for the rest of the day.
Thank you, Deputy High Commissioner. We are going to fly into our next discussion. Integral and ancillary services. Allow us just to set the stage, and then we will call up moderator and panelists. Thank you. Okay. We good? Okay. Yes. So we have the Deputy High Commissioner of Canada who's going to just give a few words of goodwill, and then we'll start this session. Thank you.
Thank you very much. It's always difficult to come last when it comes to some remarks. I did have some remarks written, but in the interest of time, I just want to say thank you for the leadership that you are demonstrating in setting up this conversation. And following up on the example of the ambassador of Rwanda, I also want to invite you to Canada, but you'd need a visa, and I'm sorry about that. Get ready, get ready. It takes a little bit of time, I recognize. But first, tell you that Canada is a country that has been founded by the development of our natural resources sector. So it's been a long, long tradition of mining development, mining exploitation, and clearly over the last decades and decades, we have learned a number of lessons. Some of those that in this continent, Canada is one of the leaders in terms of investing in mining development. So when you think of mining, I hope you also think of Canada as one of those countries that has not only the interest, but also the experience, and also a place where we're able to assist and support and partner with you to raise that capital to develop those projects that you're doing here in Nigeria. And perhaps finally, these are the types of conversations where there are lessons learned, there are experiences shared, and we are able to, by doing so, supporting the leadership that this country is showing, and particularly this set of partners. And I want a big shout out to Neri. I don't know where you are, but very impressed by what you've done, you and your partners. Clearly, in visiting the gold mining refinery, very impressive in terms of what they have done at this stage and at this time. And I hope that Canada can be one of those countries that accompanies Nigeria in its journey in terms of developing further this industry, and you do it in a responsible way, do it in a transparent way, and do it as well with partners that have best intentions for this country to reach its potential in this sector. So thank you again. I don't want to hold up the panelists, but I think it's a pleasure for us to be here. And I do hope that we get invited again to speak about what Canada has to offer in terms of partnerships and in terms of that collaboration for this sector and beyond. So good afternoon and have a great conversation.
Thank you so much. Right. So I will call up Mr. Kenneth Igmamore, West Africa Markets Editor, CNBC Africa. And while he's coming up, I will call up the panelists who can take their seats. Representative from FISAS, Execujet, AVA Global Logistics, KPMG, Bankers Warehouse, Augusto Consulting, and Legend Hotel.
All right, thank you so much, Nicole. And thank you so much, ambassadors, for all the good messages you've given us today. As the guests take their seat, there's someone who's been sitting down here that we haven't recognized today, and I'd really like for you to put a big round of applause to that person when I mention his name. The person has sat down here all through, and I think it's only right that at this point we acknowledge the person, and that person is you. You sat there through the conversation, so give yourself a big round of applause. All right, I think I have all my panelists. All right, let me get into the conversations here today. So this session basically is looking at the integral and ancillary services. Basically, we've heard about the entire value chain today. We've talked about exploration, we've talked about mining, we've talked about, different aspects of the business. But I think, in every successful gold economy, from Dubai to Johannesburg, the story is not just only about the miners and the refiners. It's also about the ecosystem that supports them. The secure logistics, the insurance coverage, the audit assurances, the financial structures, and even the aviation and hospitality systems that make trade and mobility possible for this sector. And I think it's good to put the spotlight here because I call them the quiet enablers. They're the ones who actually make this industry work without them directly dealing with the commodity here. And let me start with Mr. Goodwill Ofune here. So Ofune, or Prof? Yeah. Okay. Thank you so much for your time today. Just to put things in context here for us, speak to what your role is in the value chain and why the ISO certification and standardizations are critical for the value chain for gold.
Good afternoon, everybody, and the infrastructure sector. The data we collect assist organizations to run their businesses in forms that conform to certified standards and also to comply with existing regulations. So we have built up laboratory systems, we have built up chemistry, biology, and physical systems that span through the test in inorganic chemistry. So what we have done in this refinery is to help design, choose, through knowledge of chemical technology, to the appropriate and environmentally friendly and sustainable method for this gold refinery. We have chosen a traditional method based on aqua rigor. We have chosen a double system of purification through dissolution by making sure that all the gold goes into the liquid. We precipitate them and then move into the assay point of purification. Assay is, we do not only apply this to the mining sector, we apply it to both the oil and we support the trade of gold through ensuring high level purity and also ensuring that the content of what is brought into the refinery and the content of what leaves the refinery is documented, monitored, and certified. That is FISA's role.
All right, then. Thank you so much for that. No doubt standardization builds the foundation of trust that we need to galvanize the industry here. But now let's not move to the physical custody and security end of the gold value chain, where the assets are literally kept safe. And I'd like to invite Mr. Lloyd Onaginon from the Bankers Warehouse to speak now. I see that you've emerged from being known as a cash in transit custodian business to also having a significant lead in the market of security and also collateral and vault management of precious metals in Nigeria. As an institution with a natural partnership with financial institutions and a developing one with gold producers, what blind spots or knowledge gaps still remain? And how does the precious metal business affect risk exposures, especially with insurance and operating costs? Lloyd?
Okay, thank you. Good evening, everyone. Thank you for that question. In terms of the gaps that we're talking about, you can never completely cover your risks, but what we've been able to do in working in this particular subsector is to be able to act our part and focus on our part. From our perspective, we're either working as custodians, if we're looking at the exchange, or we are acting as collateral managers where lending is involved. And in that case, what we are doing is just ensuring the security of the gold bars and ensuring that they are kept safe. And at any point in time that there is a need to move them, we are available to move them based on agreed protocol. So that is essentially what we do, and that's a service that we render. We've done that for many years. We also do that for cash, and so this is just basically an extension of all the other activities that we've done based on our experience. We also ensure that the security is in place, and we've had partners. Ken Smith is a partner, Segilola is a partner, and we've basically moved a loan for any gold transactions. We come in as collateral managers, and we basically ensure that we play a third-party role, an independent role between the parties. We represent the lenders and ensure that at any point in time we follow the instructions. There will typically be a tripartite agreement that ensures that everybody is assured of their roles. At the end of the day, we follow instructions and we basically just keep to the agreement. But we are experts at ensuring that assets are protected and that at every point in time they are available to the parties. Thank you.
All right, therefore, standardization to protecting the assets, and it naturally leads us to the question of transparency. And we look at how investors, lenders, and insurers actually verify what's in storage. And that's where audit and assurance comes in. And I'd like to bring in the voice of the person from KPMG here, being Biafalabi from KPMG. To get your take as well, because we've seen that KPMG has recently expanded its services into inventory assurance, including auditing precious metals. How can this service mitigate the risks and concerns for insurance, financial investors, and lenders?
Thank you very much. Can you hear me? Yeah.
Loud and clear.
Thank you so much for having me here. Okay, yeah. Inventory assurance services from a KPMG perspective is not actually new. We've been doing as the assets itself. Then it's very important that when it comes to inventory, whether you are an institutional player within this industry or you are a retailer, then inventory is very critical. And that is where we come in with our methodology and we come in with our digital assets in making accounts a physical confirmation of what is on ground in whatever form that you may have it. And so whether it is just like my fellow panelists have said with regards to their custodial rule, whether it is in vaults or they are in safe boxes or they are in transit, whatever it is that you have, it is that we can verify that what you have in your records are actually traceable into a certain location and are verified to be physical. Now, when we take it further to, I think you mentioned insurers, investors, and I think lenders, yes. So let's start with insurers. Insurers provide this policy cover for these assets. And what does that mean? What asset are you covering? What exactly is that? And why are you certain that what is being said to be in place is actually there, which is actually the existence? So for us, it is the verification of those assets that yes, they do exist, and that so that you can reduce the risk of claims or fraud. The risk within this industry is quite high. There could be loss, there could be misrepresentation, misstatements, and in fact, possibly fraud as well. So when you're looking towards all this as an insurer, you need to be certain that what you have or what is claimed to be in existence actually do exist. And that's where we come in as KPMG so that we can assure you, provide that independent, unbiased, assurance that indeed those precious assets do exist. From a lender perspective, typically these assets are pledged as collateral. And so any entity or individual lending to somebody that has pledged gold as an asset for funds or capital would then need to get that assurance that indeed those are in whatever format that they are and tie in to the records that have been provided. And so that's where we also come in to actually provide that assurance. And then same thing goes for investors. What am I investing in? What exactly is this claim actually, accurate and correct? Again, same thing with regards to the existence, the viability. We tie in what we've seen, what we've counted, the physical verification, to the certificates, to the materiality of what is being claimed, and then we report on it given that assurance. Now you may want to ask, what about quality? How are you certain, KPMG, that what you are actually counting is gold? And that's where we also come in with the experts, people like Ken Smith, who can actually then partner with us to actually, come and do the verification that the quality of what we are seeing actually matches the certificates tied to those assets, and they actually are true and verified. I think that's it. I hope I've answered your questions. Thank you so much.
You've done quite a good job, yeah. Thank you so much for that submission there, Bing. And as we know, gold must move around. It must move securely. It must also move efficiently. But let's explore the logistics area now. And Sydney Odoy from Ava Global.
Hi.
Good to have you here. All right. You see that you've had a significant footprint in the global precious metals and secure logistics business.
Yeah.
Okay. It's been quite successful in working in Nigeria and expanding your portfolio across Africa. What are the unique challenges and opportunities for connecting Africa's markets to that global markets?
Thank you for the question. Very, very interesting. It's 10 to 6, so I'm mindful of time. But the question you've just asked me is just going to put me on a soapbox. And before I get onto the soapbox, I'll tell you a little story. When I met Nera yesterday, she reminded me that 2.5 years ago, I came to survey that facility. And at the time, it was just a shed. There was absolutely nothing there. And when she shared her plans of what she wanted to do, yesterday she reminded me that I had a look of shock without displaying it to her, because having spent a lot of time in secure logistics and security across Africa, it was the first time that I've actually heard somebody attempt to build a refinery airside of an airport. Particularly significant role in a lot of economies in Africa, including Ghana, where I come from. To fully understand the challenges we have in the secure logistics industry, you need to understand when a trading entity or a trading partner gets value. There's usually two variants. A refinery may give value to a mine even before they collect. So when I collect, they'll give them value. Or they'll give them value when it gets to the destination, which then means the time it takes for it to move from origin to destination is absolutely critical. Even if the refinery is giving value at the point of collection, until it gets to its destination, they can't do anything with it. So transit time is absolutely critical. And in Africa, our biggest challenge is, quite frankly, is a lack of infrastructure. I'll use Nigeria as an example. We work with Bankers Warehouse. So our business model is such that we subcontract all the work to our local partners. And we do that because we want to support local companies to grow their businesses. So we don't compete with them. But it takes Bankers Warehouse on a collection that they do for us, it takes them 6 hours just to drive from a collection site into Lagos. Then you then have to fly it across the world. Sometimes it ends up transiting in Istanbul. By the time it gets to its destination, you've lost value. How much value is it? Just calculate. If you look at the price of gold today, it's about $4,007 for today. And if you're moving 200 kilos, you're already talking 36 million. So that in itself is a big problem. Then you've got the issue of lack of capacity for the airlines. A lot of the airlines simply generate their revenue from passengers. They're not interested in VAL cargo. And so to sell to them the notion that VAL cargo, there's a lot of money to be made there, is very, very difficult. I have examples where I could collect gold in Accra, which is going to Joburg, but it will end up in Amsterdam before it comes back down to Joburg. So you can see amount of wastage, right, in the system. And all that wastage, who pays for it? It is us. So those are just a few of the challenges that we experience. And ultimately, it's about working with partners, explaining to them how critical the secure logistics aspect is to ensure that we get value as quickly as possible. Just to close the loop on what Lloyd was saying, because Lloyd, as an example, for example, can only insure the goods whilst it is here, somebody needs to take responsibility for it whilst it's in the air and when it gets onto the other side. And that is why we've got this business model of providing the insurance from origin to destination, and using local partnerships in commercial airlines to support us to add value to our mining customers and our trading partners. Thank you.
All right, then. Thank you so much for that, Sydney. You're quite a narrator, you know, and I like the way you tell your stories here. Now, a significant issue that looms in connecting the African value chain as well, and even for secure logistics, is connectivity. And what opportunity, you know, we're looking at the role of aviation here now, and I'd like to see the role of what ExecuJet sees as to close this gap in partnership with value chain actors. I would love the representative from ExecuJet to speak. I understand Adaku is not around, so just introduce yourself and then.
Yeah, good afternoon. My name is Thompson. I'm from ExecuJet. Apologies, Adaku couldn't make it. She's a bit under the weather. ExecuJet is an FBO, that's a fixed-based operator, and an MRO, a maintenance repair organization for business aviation, business jets. We have a very wide chain of network of FBOs and partners everywhere in the world, all around the world. ExecuJet in itself, we pride in the facility we have and the kind of services we offer. ExecuJet is one of the only FBOs in the world that has a CIQ, that's a Customs, Immigration and Quarantine facility within the FBO. So it means when you come in, you don't have to go anywhere else to do whatever you want to do. You can just come in, do your customs check, and come into the hotel, thanks to Legend. We are also the only FBO that has a 5-star hotel inside it. And not just that, when it comes to the security and the safety aspect, we're also ISBA certified stage 3, which is the highest in the world. I think we're the second in Africa that has it, and only about 5 around the world that have the certification as the international standard business aviation handling. There are only about 5 in Africa that has it, 5 in the world that has it, and 2 in Africa, and we're the second that has it. So you can be rest assured when you're coming in here, it's everything you expect to get when it comes to safety and security and the service you require, you will get it. So how does ExecuJet come in with Ken Smith? We can help you move your commodity from origin to destination and make it seamless for you. Partnering with Ken Smith, we can get every approval you need to move. If you are, like he was mentioning about time wasted, but we can move with private jets depending on the size, from origin straight to the warehouse here in Lagos. And then when you're done from there, commodity is handled by Ken Smith. They do what they have to do, and then the VIP or whoever escorts will move you back straight to your hotel without having to go into the land side. So that's the ability we have to make it's like we're creating like an ecosystem for the market to thrive better, so that we can reduce the time wastage, like thereby reducing the value we waste in transit. So that's where ExecuJet comes in.
All right, there. Thank you so much for that interesting points there. We talked from logistics to aviation, but then there's also another softer yet critical layer of this ecosystem, which is the hospitality and infrastructure. And I'd like to bring in Peter Idoko here from Legend Hotel Lagos. Speak to us about the role of the hospitality and tourism sector in supporting the gold market ecosystem.
You know, as I came to sit here, I was just wondering why I was given this high table. But I sat about it and I just remember, it just occurred to me that our industry is probably the softest of this ecosystem. We are the only ones that don't see or touch the gold. We don't see it, unless you leave it open, and I don't think anybody will be responsible enough to leave gold open in their rooms or in their meeting rooms and all of that. So sitting here today, I think is symbolic of our connection of what we are, the softest side, but a very relevant side of the ecosystem. Because we are the only ones, I mean, we're the only ones that actually enable the deal making that happens. We're the ones that give you the places like we've done today, giving you the food, the enablement, the everything to do all the deals that you do. The trust that you have, because, I mean, reading about this industry, I read that trust is so important. Now, we are those people that are the fulcrum that try to get you all into it. And for us at Legend Hotel Lagos Airport, we're very, part of it for us is that we're happy to be there. We're happy not to touch the gold, but we're happy to.
All right, thank you so much for that.
So, and I must also add, and we are also a free zone enterprise. Okay. So ease of doing business. You can bring for forex exchange, very easy. You can do business in the currency you want to, and minimum customs interference. You tax exemptions. So for a foreigner coming to do business, it's the best. You move from one free zone to the other free zone. As long as you don't have anything to do, your commodity doesn't enter the local market, then you don't have problem with customs and with taxes.
All right, thank you so much for that support. And finally, data is the glue that ties all of this together, you know, from investor confidence to risk profiling. You know, let's hear from the research experts. My very good friend, Jimmy Ogbowine, known him for quite a bit. He's a very proficient analyst. He used to come on CNBC Africa a lot of times to give us, you know, that expert angle on things. Now, Jimmy, through the research department, Agusto & Co. Initiated an annual report covering the gold industry. This has been ongoing for a few years. How will the input and support of the integral and ancillary services for the precious metals market affect the market outlook for gold in Nigeria?
Thank you very much, Ken. We've been talking a lot today about attracting finance, stimulating investment, unlocking investment in the sector. So let's just bring all of these home. Finance has a traditional role in the sense that there's a very simple model. Capital, we're not going to create a different benchmark for Nigeria. Nigeria has got gold, Ghana has, and quite a number of African countries have. So one of the first things we have to look at is infrastructure, taxation regimes, and all of that. Quite a number of African countries have featured at some point in time. Ghana has very impressive results there. So name some of the most broken countries in the world. They've all featured on that survey at some point. Afghanistan has at some point in time. Nigeria hasn't featured on the Fraser Institute of Mining Companies. And you only need about 5 to 9 respondents to be on that survey. So when we did that exercise, we then wrote to Fraser Institute that, can we use your benchmarks and replicate this survey for Nigeria, share the results with you so that you could integrate Nigeria into this survey? And they said, please go ahead. So we tried to. Well, guess what? We couldn't get enough respondents as well. Just 5 to 9 respondents. So first things first, Nigeria has got to, if we want to play big, and if we want to play global in mining, then we've got to be on the benchmarks that matter, because capital will go to the groom that woos it the most. The rules will not change for Nigeria. So that's one important thing we have to take away from here today. And then the second is, if you follow the conversations all morning, we've heard different things like also stimulating local capital. Earlier today, we talked about attracting pension funds. Mr. Balogun was here earlier in the day. We talked about attracting pension funds. Nigeria has got a huge, that's our biggest pool of long-term savings. But we've also got asset management, which is also growing to be an important pool of funds. These two funds put together, and we've had conversations and ideas like if we buy raw gold or if we buy refined gold, ETFs. So in Nigeria, ETFs. So in Nigeria today, I'm really not sure where we are with ETFs. I remember the last I checked, we had some South African ETF listed in Nigeria. I'm not sure if it's still here. But it's one of the kinds of capital market products we can create, which is where the investment side comes into all of these. If we create commodity ETFs that enable any one of us here, rather than buying raw gold, because as a kid growing up in Lagos from the 19th capital, from institutional investors, asset managers, pension funds, insurance, HNIs. And then lastly, for the companies themselves, how do they also stimulate capital apart from maybe just going from banks and all of that? Because banks will never find investment in exploratory stage in mining companies attractive. If I were the MD of a bank and a credit executive brought that, I'm sure I've marked him, okay? I've marked him not to ever listen to anything he brings to me anymore. So what do you typically have globally as well? There's what you call junior listings, where mining companies list, junior mining companies list. Seguilola, for instance, was listed in the Toronto Venture Stock Exchange, which is for junior miners, which are typically mining companies at the exploratory stage, development and listings as well. Thank you, Ken.
All right, thank you, Jimmy. A lot said there. We have to be on the benchmarks that matter. Product innovation is very key. And how well are we ready to raise the bar? Thank you so much, Jimmy. And thank you as well to all my panelists for today. If there's anything we heard from today is that the gold ecosystem is as strong as the support systems that carry it. And I'd like to say thank you so much for the work that you're doing for the sector as well. On this note, say thank you very much. Kenneth Gomo, have a wonderful evening.
Thank you so much, Ken. Thank you to all our panelists. Well, just to let you know what's happening for the rest of the program, we are going to close shortly, within the next 5 minutes. We're going to screen one more video that is part of the Gold for Africa in a Digital World. And then for those of you that want to find out more about SANU, please come with us, join us in the restaurant for our vibes. And everyone here that's on the program, everyone that you would like to engage with will be there. So on this note, I say thank you for your patience. And we just got a few more minutes. We'll watch Mike Obalu, the CEO of PAPS, Pan-African Payments Scheme, with his message.
Good day, ladies and gentlemen. Thank you for this opportunity to discuss my reflections around gold. I would like to thank Kian Smith for this opportunity to share with you all. I regret that I'm not able to come in to sit with you and to participate in the deliberations, but once again, I'm grateful for this opportunity. Gold, that beautiful yellow metal, which has defined wealth, has defined value for generations from the Bible days or the early human civilization up to this age. Humanity continues to be fascinated by this metal. Gold has been a symbol of purity in many religions. It has also been a symbol of reward. It has also been a proxy for wealth. And very importantly, it has been humanity's proxy for that quest for longevity. It has been that metal that has survived from the tombs of the ancient pharaohs all the way to modern bank branches across the globe. Now today, there is a major gold rush. Central banks from around the globe are now beginning to also look at gold as a key store of value for investment purposes and so on. Now, there is a modern day gold rush taking place across the globe. And Africa needs to change this picture. And this is why I'm excited about the work that Kian Smith is doing. It has taken the bull by the horn and is leading the charge, both from the mining side, also to the refining side, and also in the quest for us to create African standards and be able to enforce those African standards. I have a few questions which I hope would be something that will agitate the minds of players and participants during the course of this event. One is, is there a way that we can use digital technologies such as tokenization to actually capture the value of the gold that we have beneath the soil, and therefore be able to unlock capital that can begin to transform Africa, that can fund investments in energy, fund investments in digital infrastructure, like data centers and so on. How can we begin to unlock the set standards, African standards, but that will be accepted, set standards, African standards, but that will be accepted across the globe for the gold that is mined and processed here in our continent. And then the final one, which has to do with PAPS, where PAPS today is powering cross-border payments across the African continent. We're able to enable wallet-to-wallet payments, account-to-account payments, and so on across the continent. Today, our settlements are done by the various African currencies and net differences in some selected currencies. The question for me is, how can we, in the future and in the very near future, consider settlements to be driven or backed by the gold, which we have in abundance on our continent? How can we in the future be able to digitize or tokenize all the gold in the various African countries and settle transactions by just the movement of the values across a digital ledger? So we think that these are the conversations that we should be having for that digital future for the continent that we see. And we think that that gold will be a key element of the digital future that we see. And I hope that this event will be a good environment for us to deliberate on these key questions that have been agitating my mind, and possibly find a route for the continent to play a leading role in the current gold rush. I wish you a successful deliberation. Thank you.
Yeah, just thanks everybody for being here. Thanks to our visitors from out of town, from out of Lagos. My name is Nicole from Africa Gold Council. My colleague Keith Nare from Africa Gold Council. You met Jude earlier. We're all here. Come and chat to us, have a drink.
Your assets are always safe and accessible. SANU, securing wealth and simplifying trade. In a world where the value of money is ever changing, SANU introduces a revolutionary way to secure your wealth. A digital platform for buying, holding, and trading gold and silver anchored in cutting-edge technology. No more worries about the physical handling and storage of precious metals. SANU makes it simple and secure, directly from your phone. Trade anytime, anywhere. With real-time market data and transparent transactions, you're in control of your investments. In Nigeria,